recession is inevitable, but I don't think that it's imminent.
I think Europe is going into recession. I think the UK is in recession, and I think it's an open debate in terms of the US.
I think there's nothing inevitable about this recession, right?
We're somewhat skeptical that we're in for an immediate recession.
I really do think recession, or at least a mild one, is actually priced in.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene. I'm Jonathan Ferro, together with Katie Lyons this morning. Ramo out, Kaylee in, futures unchanged. TK, this market will make your head spin.
Market's really important here. Yes, we're focused on the Prime Minister of the United Kingdom, but John, I agree the market is really front and center in the jobs day in the U.S. on Friday. And the velocity here, what the acceleration, the convexity of weak euro is extraordinary. John, we are through 2.7 standard deviations week on euro. That's an accelerant to a 101 level.
102.24 and not far off from that 101 handle. And this is what Kit Jukes of SocGen's got to say, Tom. The euro remains effectively unbuyable this summer. That's some strong stuff.
That's really is. Yeah, I missed that. I came in and I was too busy having my morning Marmite. But John, you know, I look at where we are right now, and what's so important here, folks, is we focus on 10 Downing Street. John and I in Washington on Thursday. You know what? It is about the markets. And I love what Valier said this morning. Greg Valier, John, said, look, the markets are ahead of the institutions.
I do not believe that you've ever had Marmite. Just putting that out there. I'm so you can't bring that up and then expect me to move on.
And folks, this is really important. This goes to the inflation that John Riding's family's living, John Farrow's family's living, frankly, what Boris Johnson is living. I just said this to Anna, John. It's different over there than here. Now, Marmite is a savory spread. I understand that. And it's made out of beer or some other, I don't get it. But Tesco is taking it off its shelves. Tesco's fighting back against, reasonable price increases.
TK, we can talk about that a little bit later.
I know, we got off the rails here.
Prices up, growth off the rails in the UK, and that's the problem for the chief economist of the Bank of England. Katie, you covered this earlier this morning. To hear this from Hugh Pill, we're expecting the UK to slow with no growth next year.
Yeah. He's talking about kind of the dual challenges the UK is facing, where on the one hand, inflation is rampant. The BOE wants to rein that in. At the same time, growth is slowing. So the question is, how far can they go? And that's why the moves in the cabinet, the potential of a new chancellor coming in, potentially altering the course of fiscal policy is so important. Because do you need that fiscal support on the growth side in order for the BOE to be able to continue to try to rein inflation in?
This is important. What's the difference between Sunak or the new guy versus Yellen?
Well, before we jump on that, we've got to work out whether the new guy actually keeps that role, because the old guy, the Prime Minister, actually keeps his. So, Tom, I don't want to get into British policy before we work out whether this Prime Minister is actually going to cling on or not. Futures right now unchanged on the S&P. On the Nasdaq, we go absolutely nowhere. That's a change from yesterday. A massive change from yesterday. You enjoy that tang with Marmite. That sounds disgusting. Yields unchanged on a 10-year, 280.90 with the sound effects from TK this morning. And I guess we've got to get used to this, maybe. Katie, I've got no idea. A 99 handle on WTI, down 8% in yesterday's session.
Yeah, it has been absolutely wild. Of course, Goldman Sachs saying that move of yesterday was overdone, but Ed Morse at Citigroup has a very different view, and we're going to get that take later on this morning. What else are we going to get later on this morning? Prime Minister Boris Johnson facing questions in Parliament. That at 7 a.m. Eastern time. I'm going to guess, guys, that it's going to be pretty brutal considering we got those resignations from Sunak and Javed yesterday. The question really for me is, a cat has 9 lives. How many political lives does Boris Johnson have left? And of course, he'll be in the liaison committee a little later on this morning and face questions from them as well. How long is he going to be able to hold on as he says he is? We'll also be getting some economic data here in the U.S. 10 a.m. Eastern time is really 2 data points to watch. One of them being the ISM services number, expected to come in even more to 54. Remember, in the prior month, it fell to the lowest level in about a year. So the services expansion is still happening, just at a slower pace. So to what extent do we see that in the month of June? And we'll also be getting JOLTS data at 10 a.m. Eastern. We are expecting about 10.9 million jobs available. So that would take that ratio of open jobs to unemployed workers back down a little bit below that 1.9 level, but a key indicator to watch, especially as we consider alter the trajectory of Fed policy. We're going to get some clues into that at 2 p.m. Eastern when the minutes from the June meeting drop. Of course, in June, they went ahead with that 75 basis point hike. What was the thinking behind it, and what does that tell us about the likelihood of the move being 75 again this month? Because, of course, Powell has said it could be either 50 or 75 in 3 weeks, John.
Hey, Kayleigh, thank you. And awesome work at the Boston Pops over the weekend. Loved it. Fantastic work, Kayleigh. To her, Romain, and the whole of the team here at Bloomberg. I want to bring in Vasilios Giannakis, the head of European FX strategy at Citigroup. Vasilios, I want to bring you this quote from Kit Jukes. Here's the quote. The euro's supportive power of rate hikes is eroded by the fact that the bond market isn't trusted to stand on its own 2 feet. He goes on to say the euro loses out, remains effectively unbuyable this summer. Do you agree with that?
Well, if you asked me that question a few months ago, I would probably disagree with that. I mean, it's no secret that I'm a big believer in the European project. But look, I mean, recent developments definitely lend a lot of support to that argument. I think we've seen euro-dollar dropping below the important level of 103.41 that got hedge funds and leveraged accounts excited. But I think for me, the big story here is the recent 2 speeches coming out from the ECB. And we're just 2 weeks away from the ECB meeting in July on the 21st. And it seems to me that we still don't have a consensus about not even the nature of the admin fragmentation tool, even about the need for its existence. And let's be very clear and transparent here. If the ECB wants to tame inflation and equally at the same time support the exchange rate, fearing the pass-through to inflation, then it needs to do 2 things. And these 2 things need to be combined, hike rates and come up with an anti-fragmentation effective solution, because the one is going to lend support to the other. If one of them is missing, which is the anti-fragmentation tool, then the ECB cannot tame inflation and it cannot support the euro. And I'm just getting really worried by the recent 2 speeches that came out over the past couple of days that show that there are a lot of concerns and a lot of disagreements in the governing council. So I think the risk that we're not going to get something effective and the market is going to be disappointed has risen quite sharply.
Vasilios, with great respect to the sacrifices of Ukraine, can you prosecute a normal monetary policy in a time of war?
That's a very good question. I think that's a very good question. And I think your question applies much more to the case of the Bank of England as opposed to the European Central Bank. And I think you can't really hold the BOV responsible, but I think there is an element of great responsibility in the European Central Bank, because we have to remember, we're not talking about tightening policy. We have to remember that we're talking about removing extraordinarily accommodative monetary policy. And I understand this is a time of war, and a time of war would require some financial conditions to be loosened. But we have to be realistic about the fact that on one hand, we have an inflation that's running above 8%. On the other hand, we have a depo rate that is at minus 50 basis points. These 2 things are totally out of sync with each other.
You mentioned the Bank of England, so just quickly here, how do you put together political domestic turmoil with inflation running hot, growth that's potentially going to slow, and put it all together for a thesis for sterling?
Look, for me, on one hand, I think the ECB is the furthest behind the curve, but the BOV has the most challenging job of all. And I say this largely because the UK is not being hit by global shocks, but it's also being hit by idiosyncratic shocks, to a large extent linked to Brexit. A large part of inflation is due to Brexit. A large part of the slowdown is due to Brexit, which means that the BOV is between a rock and a hard place. So what will the BOV do? I think they'll try to keep a balance. They'll probably hike, potentially not as much as the market expects. But, you know, it's one of these situations where I see sterling losing in both cases. If they don't hike as much, then sterling is going to lose on the interest rate front. If they hike more aggressively, sterling is going to lose because the market is going to price in an even sharper slowdown. Yeah. This is an economy that cannot withstand, I cannot tolerate very tight monetary policy. We have to remember, UK mortgage market is very different to the US and parts of continental Europe. 2 to 5 year fixed rates are the norm in the UK. You don't have 25, 30 year fixed rate mortgages in the UK, which means that at each point in time, there is a greater portion of households that see their mortgages coming to an end and then need to refinance at the prevailing higher interest rate.
This is such a good point. Vasilios, it's fantastic to get your perspective on things. As always, Vasilios Giannakis there of Citigroup with a sub-120 cable story right now and just a drip feed of resignations from the British government. And Kayleigh, when you listen to people in the FX market at the moment, they'll emphasise the economy and the problem the Bank of England has got over the problems maybe this Prime Minister has got in Westminster.
Yeah, but problems just keep coming for the Prime Minister. You now have John Glenn, the UK Economic Secretary to the Treasury, resigning. This is brutal. In the resignation letter he just posted on Twitter, John, I can no longer reconcile my commitment to the role, ... with the complete lack of confidence I have in your continuing leadership of our country. So I'll ask the question again, John, how long can Boris Johnson hold on here?
You assume there will be others as well, Tom. And Kayleigh and the team have been promoting this all morning. In about 50 minutes from now, we get Prime Minister's questions.
What will happen there, John?
I think that the leader of the opposition will see an opportunity and come in exceptionally hard. It's going to be interesting to see how the Prime Minister responds to it.
When do Prime Ministers... Let me rephrase this because I'm dumb. How do Prime Ministers resign?
I don't think that's a dumb question, Tom. I think for this Prime Minister, I've got no idea. If you ask me this question about anybody else, will they be able to hold on? I would say the clock's ticking, they haven't got much time, maybe they resign today. With this Prime Minister, Tom, it seems to be every single time we're in this situation, he clings on. Though you do read the papers today and they will tell you, Tom, it's different this time. How different? Okay. We'll see. You done on the Marmite story? Mohammed wrote in.
No, I got it. It doesn't go with tame.
Can we get a live taste test?
I mean, honestly, Al-Arian, this is all he had to say. Never mind markets or the economy.
Yeah,
Tom, Marmite is good.
Thank you, Dr. Al-Arian.
Definitive.
According to Mohammed. Okay. Yeah. Let's try and get a bit more out of Mohammed this morning and not just his views on Marmite.
No, I can't get better than that.
Okay. Futures -2. We're down 0.06% on the S&P 500 from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. British Prime Minister Boris Johnson is on alert for signs of a coordinated plot from his ministers to bring him down. That's according to a senior government official. 2 of the senior members of Johnson's cabinet quit on Tuesday. Chancellor of the Exchequer Rishi Sunak and Health Secretary Sajid Javid. They left in the wake of the latest scandal, one involving allegations of sexual misconduct against a Conservative member of Parliament. And the suspect in the shooting at an Independence Day parade outside Chicago has been charged with 7 counts of murder. Dozens more charges are expected. Local officials say the 21-year-old man had probably planned the attack for weeks. He used a rifle that was said to have been purchased legally. In China, the COVID-0 strategy is being tested again. A jump in infections across Shanghai is raising the prospect of another lockdown. The city reported 24 infections today, the most in 3 weeks. Meanwhile, a highly infectious variant of the virus has begun spreading in China for the first time. The Secretary General of OPEC has died. Mohammed Barkindo was in the final weeks of his 6-year tenure as the head of the oil cartel when he died in his native Nigeria. Barkindo oversaw one of the most turbulent periods in OPEC's history, beginning with the creation of the OPEC Plus coalition in 2016. Mohammed Barkindo was 63. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
It was a mistake, and I apologise for it. I think in hindsight it was the wrong thing to do. I apologise to everybody who's been badly affected by it, and I just want to make absolutely clear that there's no place in this government for anybody who is predatory or who abuses their position of power.
The walls closing in on the British Prime Minister Boris Johnson there. A series of resignations over the last 24 hours, and they continue this morning. Good morning to you all from New York City, alongside Tom Keene and Kelly Lyons. I'm Jonathan Ferro. Bramo back with us next week. She's not missing much this week, is she? Wow, with some of these moves. Futures unchanged on the S&P 500, but euro-dollar breaking down again. 102.19. on euro-dollar, negative 0.5%. Well, and that's not all, Tom. It's not just the FX markets, the bond market too. I know you want to talk about this. Your 2-year, 284. Your 10-year, 282. You can do the maths, Tom.
Yeah.
That is a curve that's inverted.
Yeah, the British say maths, we say math. But whatever it is, there's an accelerant here, John. I think we really need to emphasize the movable feast of Wednesday morning. The second derivative is in place here. There's an acceleration to weaker euro, to 2's10 spread inversion.
How do you support the euro, Tom, without a turnaround in the European gas market? Do rate hikes get it done? That's the tough spot the ECB is in.
You got to get a bid, but John, it's not just about the dollar. You got to get a bid across various and sundry other currencies, and that's where the euro's out this morning. I noticed, John, quickly, we've got to get to Lizzie here in the news of the moment. She's at her morning Marmite, but John, I'm telling you, EM is evaporating as well. It's a sideshow this morning. Not a sideshow, it's 10 Downing Street. Lizzie Burden is there. And she has the moment in hand. Lizzie, what is the Prime Minister doing right now?
Well, he's probably prepping his lines for Prime Minister's questions. He'll face Keir Starmer, the opposition leader, again. But as we know, Starmer's missed an open goal in many of recent weeks where he's focused too much on policy, not enough on personality. And what a week it is to focus on personality after those 2 cabinet resignations from 2 of Johnson's top team.
Right, own goal, John, is British talk for like letting one in.
Do they not have that in hockey?
No, we don't have that. John, PMQs, and you and Lizzie frame this for us, starting with Gladstone and Churchill as 2 fossils that wanted to change the schedule, and I guess Tony Blair made it modern. John, what happens with the first question of the questions to the Prime Minister?
Sometimes it can be a little bit crazy, and Lizzie, I'd love you to build on that. Can you just go through the order of events when this starts in about 40 minutes, and when we get to the serious stuff, when we get to hear from the leader of the opposition grill the British Prime Minister?
Yeah, so we'll get the questions from the leader of the opposition first. Johnson will respond. It's a back and forth. And then it'll open the floor to MPs from other parties. You tend to get questions from the Prime Minister's own MPs that are fluff questions. They're just to give him an opportunity to say exactly what he wants to say. But then in previous sessions, there have been key speakers saying things that have been really damaging to the PM. Theresa May, David Davis, big names coming out and putting it on the record how much they disapprove of the Prime Minister.
Well, and of course, we've heard from John Glenn just resigning, saying that he no longer has confidence in Boris Johnson's leadership. It's just another after another after another, Lizzie. How many more resignations can Boris Johnson take before his leadership is just untenable entirely?
Yeah, I'd say about John Glenn, he's thought to be an ally of Rishi Sunak, so it's perhaps not a surprise that he's joining Sunak on the backbenches, where, of course, Sunak will be more free to organise a potential leadership bid if it comes to that. It doesn't seem like Boris Johnson's going to resign, of course. He's called the greased piglet. That's on the front of the newspapers in the UK today. The other option would be for the 1922 committee to the greased piglet able to wriggle out of such situations. The other option would be for the 1922 Committee of Conservative Backbenchers to change their rules so that 1-year grace period is reduced. But the pressure on Boris Johnson of the threat to change those rules could be enough to make him go.
Right, John, jump in here as well with Lizzie. We in America have a clear understanding how a president resigns. It has to do with a congressman from Western New York, Barbara B. Conable, driving over to the White House and explaining to Richard Nixon it's done. That's sort of the modern era. John, let me start with you. How does a prime minister resign?
Well, you have an exception, don't you? That's your exception. You have just a handful of examples. Tom, this is pretty normal stuff.
This is normal.
This is pretty normal stuff.
People are nuts.
When you go to a general election, Tom, you don't vote for the Prime Minister, you vote for your MP. Unlike you, when you vote for your president. That's a presidential system, this is a parliamentary one. So, Lizzie, for the British people, do they still see it that way? Is there a frustration that the next Prime Minister will be basically elected by a smaller pool, relatively speaking, a much smaller pool of Conservative Party members? Are we still on board with this system, or is there resistance to it? Are people pushing back against it?
Well, this was the argument that Jacob Rees-Mogg was making on the broadcast round yesterday. He's been so loyal to Boris Johnson. He was saying that even if someone comes and replaces Boris Johnson as leader, they won't have the mandate that Boris Johnson won in 2019, this landslide majority. So it's going to be difficult for whoever comes in to replace him. But in terms of where the British people are at, don't underestimate how difficult it will have been for these ministers to defend what's gone on with Chris Pincher, this MP, over the allegations of sexual misconduct when they've been back in the constituency, not just on the broadcast round, but that added to the cost of living crisis, added to Partygate. Boris Johnson, the first sitting PM found to have broken the law in office. It's mounting pressure on Johnson now.
Lizzie, great work. We'll catch up with you a little bit later as we count everyone down to the Prime Minister's questions round in about 35 minutes' time, Tom. I understand we'll bring that to our audience live on TV and radio.
We need to do a civics lesson here, folks, and I do this with great respect for America. And I understand there's primary voting in America where somebody wins by 27 votes in that. But, John, the fabric of UK politics is Johnson, like May and others, is picked by the Conservative Party. Is it fair to say, John, that Boris Johnson was selected by 92,000 votes over, I believe it was Jeremy Hunt a number of years ago, versus a general election of 24 million votes? I mean, is that an unfair statement, John?
I think you can say both, to be honest with you, Tom. And I don't think I'm sitting on the fence here when I say that. I think ultimately, when you go to vote for your local MP, you know who the leader of the party is, of the party that that MP is a part of. So I think that, sure, it has an impact. It just is not a direct thing. When you go to put your signature, your box-ticking exercise, you don't put it next to Boris Johnson. Unless, of course, he's your local MP. This gets very confusing, doesn't it?
It is.
I feel like we do this 10 times a year as well, Tom. And you
are we doing this more often, John?
It.
I mean, is this because of Brexit? I mean, the last 4 or 5 years, the chaos of UK politics, is it normal?
I'll say this, from the outside looking in, I think a lot more people from the outside are looking in because of Brexit. Does that help?
Yeah,
otherwise we wouldn't pay attention.
American politics is so calm.
That's true. Or maybe not. Future's unchanged. This is Bloomberg. What a turnaround we saw yesterday from New York City this morning. Good morning. Here's the state of play right now. Equity futures positive about 0.06% on the S&P. On the Nasdaq 100 up by 0.05. That's the equity picture. Here's the bond market story. 2s, 10s and 30s. And just look at the difference between 2s and 10s. 284 on 2s, on 10s, 282. That's an inverted yield curve. That spread now negative 2 basis points, ahead of some data a little bit later that Katie went through. Look out for ISM services and jolts, and look out for Fed minutes too. And remember this, Citi made this point, and it's an important one. When this Fed met, just a couple of days before that meeting, we were all expecting 50 basis points. Then things changed. Things changed because there was a couple of newspaper articles about maybe going 75, and they went 75. And I wonder, Tom, to what extent these Fed minutes capture that shift from this Federal Reserve.
Where I am on this. Geez, you're baiting me here. This is just like the Marmite thing. John, I don't look at the Fed minutes. I'm sorry. I don't think they're of value. They're dated. They're stilted, several in that. What matters to me is what the market is saying. And John, not only are we getting curve dynamics here and inversion, but on your screen on radio, what John didn't mention is 30-year bond is migrating down to a 299. We're not there yet. But John, as you get inversion with a leveling lower in the entire yield curve, that speaks volumes.
I didn't get there because you interrupted, Tom.
Well, that's,
3.06% on a 30-year. I mentioned 75. Will we get 75 basis points at the end of this month from this Federal Reserve?
Do you think so? How?
Tom, this market's pushing back. We'll see.
Yeah.
Credit spreads have certainly been wider, anticipating that this Fed will not pivot anytime soon, even with the weakening economic data that we've seen. We'll get Mike Dada's thoughts on that in just a moment. Speaking of 75, that is now the year-end through 2023 forecast from HSBC on bonds, 10-year bonds. They're looking for 75. Their words, they go mildly bullish on a German 10-year. Your German 10-year right now, 124. And here's the why. The why is essentially that this rate hiking cycle from this ECB does not go beyond this year. It will be shorter, and the peak will be a whole lot lower, Tom, from the European Central Bank as we look at a euro at 102.20.
Dynamics right now, and the partition here on the yield space is across looking at nominal and looking at inflation-adjusted economics and then folding it in to your belief in investment, your belief in global finance. Joining us now, Michael Darda, Chief Economist, Macro Strategist, MKM Partners, on fire the last time we talked to him about the moment we are living. Michael, are we in a nominal or are we in an inflation-adjusted space? Which should we study?
Well, Tom, I think investors should be watching the front edge of the inflation trade here, which is collapsing. And that tells us that nominal GDP growth, which has been super strong, is likely to decelerate. That's actually quite good news on the inflation front. So the Fed is looking for these headline inflation figures to come down. It's not going to happen overnight, but I think it's going to start happening soon. But the market has shifted its focus and concern to the business cycle from inflation. So, the first leg of the sell-off in equities this year, really the bulk of it, was driven by a rising 10-year Treasury yield. Now yields are pulling back with growth concerns, and the fears have shifted to potential recession.
Michael, in your youth, Jude Wininsky would have put out a chart showing 49 to 53, the Eisenhower disinflation. We seem to be ignorant about how this could change. Jim Cramer of the Death Star is out this morning actually mentioning how quickly you can get to disinflation. How quickly can you, Michael Darda?
Well, I think if we end up getting some good luck on some of the supply side shocks, that will certainly help. But critically, nominal GDP growth has been running at double digits since the economy bottomed in 2020. That really needs to reverse, and I think it will reverse with tighter monetary and financial conditions. And then it's just a matter of time in terms of inflation coming down. If the Fed can get nominal GDP growth back to around a 4% per annum pace, inflation will eventually come down to 2. We can debate how long that will take. It's not going to just be a couple months. But let's look at forward-looking indicators, Tom, and the Fed should be looking forward too. The 5-year inflation break-even spread in the TIPS market has collapsed more than 100 basis points. That spread is highly correlated in a leading fashion to nominal GDP growth. So slower nominal GDP growth, tighter monetary and financial conditions, and eventually lower inflation. That's how it works.
But lower GDP growth and not an outright recession, right? You think that those fears are probably overdone here.
Yeah, I think there's always going to be a risk of recession looming out there when the Fed is moving quickly and tightening monetary policy. So I understand those concerns. I don't see the recession at this point. There's a lot of fear that we're going to get 2 down quarters of GDP. I'll break some news here on the show. You could have 2 down quarters of real GDP growth and not have a recession. So the NBER, the official arbiter of U.S. business cycles, defines a recession as a period of falling production, sales, income, and employment, with most of the focus on real income, less transfers, and employment. So hard to see a recession with the unemployment rate at 3.6% and not budging. If that changes, then I think the recession picture is coming into focus.
Mike, do you think market participants care about the NBER? And I don't mean to be snarky about that. I just mean no one's going to wait for that, are they? From the people that you have conversations with, what are they going to be focused on and how will they respond to that second consecutive negative print?
Yeah, well, John, it's a good question. Here's one way to think about that. Your typical bear market in a recession is just over 30%. We went down 23% in the first 6 months of the year. So if you think about it this way, if we've already essentially priced in 2/3 or more of a recessionary bear market, because investors are not going to time it, and because it's not a sure thing that we're going into recession this year, do you actually want to be negative on equities here, or maybe a little bit more contrary and optimistic? I would say the latter rather than the former. But you're exactly right. Markets are looking forward. Most of this collapse in equity prices, I think, was brought on by higher long-term interest rates. That's reversing now. So let's see if we get a bit more ongoing stabilization in equity prices.
Okay, but if you're also saying that we're not necessarily heading for a recession in the near term, is that the fact that we have seen yields moving lower appropriate, considering also if we don't get as dramatic a growth slowdown, that could mean the Fed just goes more aggressive for longer?
Yeah, I think what we want here is monetary and financial conditions to tighten. That's happening. The Fed wants that. So lower inflation expectations, lower commodity prices, wider credit spreads. That means the Fed's medicine and therapy is working. And so the risk is if they don't recognize that and they go too far, then you get a recession. I don't think we're quite there yet, even after another rate hike or series of rate hikes. But, the fear is that we're getting closer to that point, and with growth slowing and the Fed being aggressive on tightening, the risk of a downturn does rise. But we're just not quite there yet. So I think we should take a step back, take a deep breath, and not be so negative on equities. We've priced in a lot of risks so far this year. We've had almost a 5-point multiple decline in over a 6-month period in the S&P 500. We've only seen 4 multiple points or more over 6 months, 4 other times in post-war history. And in every single case, the market was up strongly over this.
Okay. Michael, part of your charm, besides having 2 ill-mannered dogs, is you actually talk about markets and what to do in markets amid your economics. Are you saying load the boat here and go long?
I'm not saying load the boat. I'm saying be patient. If investors have been on the sidelines, if they came into the year cautious, then this is the time to be buying, to be adding to the portfolio. If they came into the year fully exposed and long and they went down with the ship, then don't sell now. It's too late. They're not going to be able to time the bottom.
Mike, you're one of the best. It's great to hear from you. Mike Dowder there of MKM Partners. And TK sounding almost constructive on this equity market.
For him, that's way constructive. And I think this is the tone maybe where the bulls are now, whether it's Ben Laylor, John Golub, and the others. You know some of them better than I do, John. I think they're trying to construct after multiple shrinkage. When do you get the when of it? When do you get in?
Sure.
And how much of this, how much do you get in with?
I'll catch up with John in the 9 o'clock hour, Tom, around the market open on his new downgrade. So looking forward to doing that.
One of your other properties.
The point that Mike just made about the MBER, Tom, just think about that. This Fed, will it see things the same way? And ultimately, even if growth is decelerating and you get this negative print again for the second quarter, Tom, but they see a labour market that's still pretty robust, is that a Fed that goes on hiking? And the likes of Citi anticipate that will be the case.
There's some movable parts there, John, but what it comes down to, and I'm working here off the True Pro, Jeffrey Frankel of Harvard University, simple formulas of recession are baloney. And MBER, they're the IBAR, and they come out later. You're going to hear about it after the fact. The Fed doesn't have that luxury. But where I would go, John, in the modern study of the Fed is it folds into labor, and that goes to the jobs report, which is of uncommon value this Friday.
Tom, I don't want to be dismissive of the MBER. I just feel like that's more for the economic historians. That's for the books. What we've got to work out is how the policymakers are going to respond to the incoming data and how market participants will factor some of that in and internalize what's happening.
I would agree with that. And the distinction here is policymakers and front-rate PhDs, think of Vince Reinhart years ago, versus academic papers almost like Jackson Hole. I mean, basically NBER, John, is Marty Feldstein and James Perturb of MIT folding over a Jackson Hole kind of academic paper attitude into something people really read and read carefully.
You mentioned Jackson Hole. Where are we going to be when we get to Jackson Hole?
Oh, who knows?
Given the trajectory of things in a moment.
Well, I got at least these red cowboy boots coming in. They're like Lucchese low
You the
heels.
stylist.
Yeah, I'm
Jackson
styling.
Hole coverage.
John, you should see the Tony Lamas
That was
you're
a nervous laugh from Kaylee Lyons, who does not want any part of
I
this.
have this vision of a bolo tie replacing the bow tie.
No, but we could go bolo.
I think that would suit you, TK. Should we make that happen?
I don't.
We should make that happen.
I'll
buy you that.
The truth, folks.
You don't buy me anything.
4 a.m., 38 degrees, and there's not an economist in sight.
Scared
That's
of
the
bears.
reality.
I can't wait for that, Tom. Scared of bears.
So,
Futures.
Mr. Grizzly Bear, do you like Marmite?
Unchecked. Hey, Tom, you joke. Knowing you at that time, that might actually be the interview. The Nasdaq down 6 with negative 0.06%. No drama in stocks. Drama in the euro. 102. 102.
Wow, look at that, 102.04.
Just clinging on euro dollar. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In the UK, Boris Johnson is fighting to stay in power after two top ministers jumped ship. Chancellor of the Exchequer Rishi Sunak and Health Secretary Sajid Javid have quit. Their resignations came after Johnson apologised for the latest scandal, one involving allegations of sexual misconduct against a Conservative member of Parliament. Meanwhile, the new Chancellor of the Exchequer will be Nadeem Zahawi. He made his name as the vaccines minister during the pandemic. In Highland Park, Illinois, authorities have charged the suspect in the shooting at a 4th of July parade with 7 counts of first-degree murder. They say that dozens of more charges will be filed in the coming days. If he's convicted, the 21-year-old could be sentenced to life in prison without parole. Illinois no longer has the death penalty. European Union lawmakers have voted down an objection to labelling natural gas and nuclear energy as green. That removes the last major barrier to potentially billions of dollars of funding. New gas plants will be able to tap into a fresh pool of money from environmental, social and government investors, but only when they are replacing coal-fired stations. The US says that Iran is not serious about negotiating a return to the 2015 International Nuclear Accord. The State Department cites what it calls a lack of forward momentum and says Iran keeps raising extraneous demands. One of those is that the US remove the Islamic Revolutionary Guard Corps, a powerful military organization, from its list of terrorist groups. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I'm concerned with what is good for this country, and what is not good for this country is this government. We have seen the mismanagement of the economy. We've gone from being one of the best performing economies in the G7 to 19th in the G20.
That was Christine Jardine there, the UK Liberal Democrat MP. From New York City this morning, good morning with Tom Keene. I'm Jonathan Ferro, together with Kelly Lyons. Lisa Abramowicz back with us next week. Here's your market. Futures down 1/10% on the S&P, and the Nasdaq 100 down by 0.16. That curve inversion continues, 282 on a 10-year, about 284 on a 2-year yield in the Treasury market. Yields just a little bit higher on a 10-year by maybe a basis point or so. Here's the chart right now on all of our screens on the Bloomberg terminal. Euro dollar intraday getting very, very close to a 101 handle. The low of the session, 102.00. Euro dollar, Tom, more trouble ahead for many people in foreign exchange.
Across all currencies as well, sterling 119.26 and DXY finally vaulting to a 106.90, a 107 DXY. Get you back a good 20 years. We'll continue to watch euro as we find a 101. We're not there yet. Right now, and to massively rip up the script, which we can of course do before questions to the Prime Minister, which will be in 12 minutes. We hope to bring you the fire of Johnson and the Labour leader Starmer. Leslie Vinjamuri joins, head of United States and America's program at Chatham House. But today, with her immense abilities, we can rip up the script and get a primer on a moment. Leslie, has it ever been this chaotic? How did the United Kingdom get here? Or is this normal back to early Tudor England?
Tom, I actually think, I'm an outsider observing British politics from the inside over many, many years. And, my understanding of the UK is that when things change, they often are very dramatic, and they often do happen very, very quickly. And if you think back to, just after the referendum, the move from Theresa May to Boris Johnson, there are often very dramatic times. This is certainly one of them. And it's very difficult to predict exactly how quickly things will change. It certainly feels like that we are on the precipice of a very major shift at the very top.
You are expert at the special relationship of the United States and the United Kingdom. I believe we celebrated that special relationship on July 4th. John noted that it's with the war that the colonies won. Thank you for that, John. And Leslie, I look at the special relationship, and I guess the question is, the Prime Minister stands before the House of Commons today. How alone is he And how alone is the United Kingdom in global political economics?
Well, it's a funny moment for both the United States and the United Kingdom. We've just come out of a tremendously successful NATO summit, the adoption of a new strategic concept, the first time since 2010, with the United States and the United Kingdom right out at the forefront of really repositioning and really doubling down on NATO's commitment to defending its eastern flank, to supporting Ukraine. The United States is very active in that, as is the United Kingdom. But then you look back home, and of course, in the United States, we've had the tragedy of the shootings in Highland Park. Britain looks at America, doesn't understand how this has happened and when or how the U.S. will come out of it, and how, of course, Americans are looking at the United Kingdom befuddled that the leadership looks to be, frankly, lacking a moral compass and in disarray, and waiting to see when the domestic politics will sort of hit the level that Britain's internationalism has, at least since Russia's invasion of Ukraine. So these are difficult, but not straightforward times.
Okay, so there's a question of when domestic policy will impact foreign policy then, Leslie. And we can talk about the UK-US relationship, but what about the continent of Europe and how Brexit may have exacerbated all of these issues going on the island right now?
Well, I think, the number one factor that, and you all know it very, very well, is that now the real economic impact of Brexit is turning up in the UK's economy and its economic position. That, of course, is affecting how people feel. And if you add that to the sense that this government is not taking its own moral position on the policies that it made during COVID, we've had Partygate. We now have these questions of Boris recognizing the shortcomings of some of those people he's appointed. You put those things together and people, I think, start to really wonder. If you add on the second part of the European question, of course, is the unresolved question of the Northern Ireland, where it's not only about, will Britain sort out its relationship with Europe? People are waiting and waiting to hear about this. They're waiting to hear about this from Boris Johnson. They're also waiting to hear more about this from Keir Starmer. And of course, the United States and President Biden in particular are very concerned that the Good Friday agreements are not undermined, that this relationship is secure. So it's a very difficult time. If you add to that what looks like it might be a leadership transition, certainly a transition of the cabinet, it makes for very unsteady times, very rocky times. But to go to your other point, right, what does this mean for leadership? We've seen strong leadership by the US and the UK and NATO. The rest of the world is looking at America's democracy. They're looking at the question of guns, abortion rights, and they're looking at the UK and they're wondering what credibility, what moral credibility do these countries have to talk about democracy, to talk about human rights, and to talk about values on a global stage.
Leslie, wonderful to get your views on an important morning over in the UK. Leslie Vinjer-Murray there of Chatham House, very, very focused on what happens with Europe as well, Tom. 102 on euro dollar. To see this where it is right now, can you imagine that a year ago, Tom?
Yeah, the summation here, let me get the chart up here. I'm sorry, I don't have memorized the, on DXY, which is the major trading partners, 58% euro, 14% yen, 12% British pound, Canadian dollar follows on at 9% with krona and franc behind it. And John, the heavy weighting here to euro shows DXY exploding out 106.91. My lead here, John, this is not just about euro. It's about dollar strength as well. And there we are. That's a plunge through. That's what happens when you hit here now, is the euro falls below 101.99.
What a move we've seen. And if you think it's hard to read the Federal Reserve right now, Kelly Lyons, try reading the ECB. What on earth are they going to do?
I don't know, John. And the question is, how much is this just a risk sentiment story versus a rate differential story? Because on the one hand, you can say, okay, the euro is falling behind because the ECB is behind. They are not being as aggressive as some of their peer central banks. On the other hand, if it's a growth concern, can the ECB even go that far to tame inflation if the economy is screeching to a halt and you have a potential gas crisis in Europe? I don't know where that leaves Christine Lagarde. I do not know where this leaves that foreign exchange market. But a 101.93 on euro dollar this morning, John, how far away is parity?
A bit of an air pocket there as soon as we broke through 102. Tom, we got a lot to figure out, and there was some pushback against that anti-fragmentation tool at the ECB that's still not even been created by the Bundesbank earlier this week. And did you ever think we'd be talking about strikes in Norway? Strikes in Norway.
Well,
that was the conversation yesterday.
Not only strikes in Norway, but I believe labor unrest at SAS, the acclaimed air carrier, as well. John, will the United Kingdom be riveted on these questions to the Prime Minister?
I think they will be, Tom, and we will be too. That is coming up next. Questions for the Prime Minister, the weekly event with a little bit more spice, a whole lot more spice. Looking for questioning from the leader of the opposition party, Sir Keir Starmer. We'll take some of that live on TV and radio next from New York City. This is Bloomberg Surveillance.
Recession is inevitable, but I don't think that it's imminent.
I think Europe is going into recession. I think the UK is in recession, and I think it's an open debate in terms of the US.
I think there's nothing inevitable about this recession, right?
We're somewhat skeptical that we're in for an immediate recession.
I really do think recession, or at least a mild one, is actually priced in.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene. I'm Jonathan Ferro, together this morning with Katie Lyons. Bramo back with us next week. Your equity market negative 0.1%. Guy Johnson over in London nailing it this morning, Tom. We are on two things, Parity Watch 1 and Resignation Watch number 2.
And they're linked together here, and the stress and the tension away from, is Leslie Vinjamuri was talking about, the scandals is the reality of an uncontrollable inflation. And I would really emphasize for our American audience on radio and television, it's different in the United Kingdom. Utility bills, grocery bills, the nearness of the continent, the nearness of the war in Ukraine makes it a different moment, as Sir Lindsay Hoyle talks in the House of Commons right now.
We will hear from the Prime Minister right now. We can hand over to the House of Commons to listen to Prime Minister's questions.
For a decade, increasing national insurance thresholds to make tax lower and the tax burden easier. These changes will benefit 30 million people across the UK. And I'm pleased to say that two of those people are seated here in the public gallery today. Mandy Banfield and Alan Calzari, a typical worker, will now save £330 per year, with 70% of employees better off as a result. That is real money for real people. Mr. Speaker, I'm sure the House will also join me in wishing the best of luck to England and Northern Ireland, who are competing in the UEFA Women's Euro 2022 tournament, which starts today, and I'm sure they will both make the nation proud. This morning, Mr. Speaker, I had meetings with ministerial colleagues and others. In addition to my duties in this House, I expect I shall have further such meetings later today.
Thank you, sir. Last week, we launched a new approach to combating knife crime in Milton Keynes, which means increased use of stop and search. It means tougher charging and custody, tougher sentencing, faster youth diversion, and more work with parents and communities. Would the Prime Minister agree with me that if you carry a knife in Milton Keynes, you should expect to end up behind bars?
Yes, I thank my honourable friend for what he's doing to campaign for tougher sentences in Milton Keynes, in campaign against knife crime. And as a result of what the Conservatives have done, adults who are convicted of certain offences involving a knife, including threatening with a knife or a second offence of possession, face a minimum sentence of 6 months imprisonment, Mr. Speaker. And guess who voted against tougher sentences for knife crime?
We now come to the Leader of the Opposition, Keir Starmer.
Thank you, Mr. Speaker. Today is the start of the Women's Euros, and I know the whole House will wish the Lionesses the very best of luck in bringing football home. Mr. Speaker, it's also... Mr. Speaker, it's also been 40 years since the death of Terence Higgins. Terence worked at Hansard by day and Heaven by night before he sadly died of AIDS. The Labour Party and the Terence Higgins Trust are committed to ending new cases of HIV by 2030. Together we can. Mr. Speaker, last week, a government minister was accused of sexually assaulting a young man. I want to quote the victim's account. He says, "He grabbed my arse and then he slowly moved his hand down in front of my groin. I froze." I accept that's not easy listening, but it's a reminder to all those propping up this Prime Minister just how serious the situation is. He knew the accused minister had previously committed predatory behaviour, but he promoted him to a position of power anyway. Why?
Prime Minister.
Mr. Speaker, that individual, the member for Tamworth, no longer has the Conservative whip. He no longer has a job. He is no longer, as soon as I was made aware of the allegation that he has just read out, Mr. Speaker, and the complaint that was made, he lost his status as a Conservative MP, and he is now the subject, Mr. Speaker, of an independent investigation to the Complaints and Grievances panel. And that is entirely right. And I want to say to him, Mr. Speaker, I want to say to him that I abhor bullying and abuse of power anywhere in Parliament, in this party or in any other party.
Keir Starmer. None of that explains why he promoted him in the first place. And we've heard it all before. We know who he really is. Before he was found out, he's reported to have said he's handsy. That's the problem. Pincher by name, pincher by nature. Now, has the Prime Minister ever said words to that effect? And I'm not asking for bluster and half-truths. We've all had enough of that. Yes or no?
Prime Minister.
Mr. Speaker, I'm not going to trivialise what happened. Yes, Mr. Speaker. Yes, Mr. Speaker. I'm not, because there's very serious complaints have been raised against the member for Tamworth, and they're now being investigated, Mr. Speaker. It is true that a complaint was raised when he was in the Foreign Office, and the matter was resolved. It's absolutely true. It's absolutely true, Mr. Speaker, that it was raised with me. I greatly regret that he continued in office, and I've said that. I have said that before, Mr. Speaker. I have said that before, Mr. Speaker. But it is now the subject of an independent investigation, and that is the right thing, Mr. Speaker. And frankly, I think the people of this country would like also to hear. They would like also to hear about other jobs that are held by people in this country, not least the 500,000 people we got off welfare into work in the last 6 months alone, Mr. Speaker. Those are things that are making differences to the lives of people up and down the country, and I'm proud of it.
Keir Starmer.
No one's cheering that.
No denial. And he says the matter was resolved when he means it was upheld. Exactly. And they're all sitting there as if this is normal behaviour. Exactly. When that young man reported his attack to a government whip, she asked him if he was gay. When he said that he was, she replied, "That doesn't make it straightforward." That comment will sicken anyone who's experienced sexual assault and then be made to feel like they somehow asked for it, or who worry that prejudice means their complaint won't be taken seriously. Will he apologise for those disgraceful comments on behalf of his government?
Mr. Speaker, I've already said that I regret very much that the member for Tamworth continued to hold office after the complaint was made against him in the Foreign Office, and it was resolved in the Foreign Office. His apology was accepted, but clearly that was not enough. And in hindsight, Mr. Speaker, I should have realised that he would not change. However, when it came to the Friday of last week, and when I was given the information that he's read out about the complaint that was made against the honourable member, I acted immediately, Mr. Speaker, and I took the whip away from him. And we will not tolerate that kind of behaviour in this or any other party, Mr. Speaker. And what we also want to do is to help people up and down the country with the things that also matter to them, like cutting their taxes, Mr. Speaker, by £330 this year, which is what we're doing.
Keir Starmer.
Doesn't that just sum him up? Awful behaviour, unacceptable in any walk of life. It's there for all to see, but he ignores it. It was the same when his ally was on the take from the lobbyists. It was the same when his Home Secretary was bullying staff. It was the same when taxpayers' money was being abused. And it was the same when he and his mates parted their way through lockdown. Anyone quitting now, after defending all that, hasn't got a shred of integrity. Mr. Speaker, isn't this the first recorded case of the sinking ships fleeing the rat?
Mr. Speaker, look, he talks about. He should hear what his lot say about him, Mr. Speaker. He talks about integrity. He wanted to install the member for Islington North into number 10, Mr. Speaker. That's what he wanted to do. Imagine what our country and what the world would be like now. He talks about integrity. He voted 48 times to overturn the will of the British people and take us back into the European Union. And by the way, listening to his muddled speech the other day, that is exactly what he would do again. Mr. Speaker, he talks about integrity, but Mr. Speaker, he has voted time and time again against sanctions on criminals that would put them behind bars. This is the government that is tough on... I'm sorry, he talks about integrity. He is himself facing a criminal investigation, Mr. Speaker, which he asked me to resign.
Keir Starmer.
What a pathetic spectacle. The dying act of his political career is to parrot that nonsense. And as for those who are left, only in office because no one else is prepared to debase themselves any longer, the charge of the lightweight brigade. Some self-respect. Mr. Speaker, for a week, he's had them defending his decision to promote a sexual predator. Every day, the lines he's forced them to take have been untrue. First, that he was unaware of any allegation. Untrue. Then, he was unaware of any specific allegation. Untrue. Then he was unaware of any serious specific allegation. And now he wants them to go out and say that he simply forgot that his whip was a sexual predator. Anyone with anything about them would be long gone from his front bench. In the middle of a crisis, doesn't the country deserve better than a Z-list cast of nodding dogs?
Well, Mr. Speaker, it's exactly when times are tough and when the country faces pressures on the economy and pressures on their budgets, Mr. Speaker, and when we have the biggest war in Europe for 80 years, Mr. Speaker, that is exactly the moment that you'd expect a government to continue with its work, not to walk away, Mr. Speaker, and to get on with our job and to focus on the things that matter to the people of this country. And so we're not only cutting taxes today, Mr. Speaker, we're putting £1,200 into every one of the 8 million most vulnerable households in the country, Mr. Speaker, thanks to the strength of our economy and thanks to the decisions that we took, Mr. Speaker, which he opposed at the time.
Keir Starmer. The only thing he's delivering is chaos. I started this session with a quote from the young victim in all this, how he froze when he was attacked. When I was prosecuting rapists, I heard that from victims all the time. Victims said they froze because it's not about sex, it's about power. And the power the disgraced government minister had was handed to him by that Prime Minister. And he's only in power because he's been propped up for months by a corrupted party defending the indefensible. So it's no longer a case about swapping the person at the top. Isn't it clear? The only way the country can get the fresh start it deserves is by getting rid of the lot of them.
Mr. Speaker, the difference between this...
Shh. We've got to get through Prime Minister's questions. Prime Minister.
Mr. Speaker, the difference between this government and that opposition is we have a plan and they do not. we're getting on with it. They want to focus on this type of issue, Mr. Speaker. We're going to get on with our jobs. We're going to control prices, Mr. Speaker, by not giving in to the union barons. They're paid by the union barons, and they're proud of it. We were the first European country to arm the Ukrainians, Mr. Speaker. I'm proud of that. And those guys, Mr. Speaker, the party opposite, not only do they want to put Mr. Corbyn into number 10, the member for Islington North, but 8 of them, including the shadow foreign secretary, the shadow deputy leader, and 6 others voted to get rid of our independent nuclear deterrent, Mr. Speaker. Today we are cutting taxes, we're helping 500,000 people into work, and thanks to the strength of our economy, we're helping people up and down the country, and we are going to continue to deliver on the mandate I was given.
Johnny Mercer.
Thank you very much, Mr. Speaker. On Monday night, the Northern Ireland Legacy Bill reached its 3rd reading. And so with it, the beginning of the end of the journey, a long journey to make sure the service and sacrifice of those who served in Iraq, Afghanistan, and now Northern Ireland is not rewritten by those who seek only to line their own pockets. But would the Prime Minister agree with me that never again can we allow such a gulf to open up between this place and those who serve? Never again must they be made to feel like we are not on their side. And will he redouble his commitment to make sure this is the best country in the world, to serve in the military and be a veteran all their family?
Thanks, my honourable friend, very much. I thank you for all the work that he's done for veterans and continues to do. This bill will give veterans the certainty they deserve, and we're fulfilling the manifesto pledge to end the cycle of investigations, but also at the same time making sure that families can get the answers they need about what happened to their loved ones.
We now come to the Leader of the SNP, Ian Blackford.
Thank you, Mr. Speaker. And can I give every best wish to the England and Northern Ireland ladies football team as they approach the Euro Championships. There's nothing better than seeing your teams in these finals. Can we also commemorate the passing 40 years ago of Terence Higgins and all those that have died from AIDS and Sen? And I'm sure, Mr. Speaker, the whole House will want to join with me in passing condolences to the family of friends of the Scottish football goalkeeping legend Andy Gorham, who sadly passed far too early last weekend. He will long live in the memory of the best.
We welcome all of you on Bloomberg Radio and Bloomberg Television, particularly across America, at Politics Done Differently. This is an historic moment for the United Kingdom. The Prime Minister under threat of his office in the House of Commons, with the Speaker, Sir Lindsay Hoyle, managing the emotion of Conservative and Labour. You're hearing the serious conversation of the political moment for the Prime Minister, leavened with other matters as you get in questions to the Prime Minister. And John Farrell, what is so important here is who is sitting behind the Prime Minister, Mr. Johnson. It is a different team than hours ago.
It is on either side of him. You now see a new Chancellor, Tom. I understand we'll go back to this and continue to listen.
We should be talking about the Tory cost of living crisis, soaring inflation and the growing cost of Brexit. But instead, it's always about him. How many more ministers need to quit before he finally picks up his pen and writes his own resignation letter? Perhaps that's what he's doing now.
Actually, Mr. Speaker, I was just jotting down some notes on his question, which I thought was excellent when he was talking about the economy. Because that is the issue that the country faces, and that is where this government is introducing, I think, the most important solution: helping families up and down the country with £1,200 going into their bank accounts right now, cutting taxes for 30 million people, £330 tax cut, and helping 500,000 people into work through the Way to Work scheme. That is a fantastic thing to be getting on and doing. That is the priority of this government, and that's what I'm going to focus on. I'm glad he likes it.
Ian Blackford.
My goodness, nothing to see. We should all move on if we live in the world of the Prime Minister. You know, a few weeks ago I compared the Prime Minister to Monty Python's Black Knight. Actually, turns out I was wrong. He's actually the dead parrot. Whether he knows it or not, he's now an ex-Prime Minister. But he will leave behind two deeply damaging legacies. I hope the dishonesty of his leadership follows him out of the Downing Street door. But the other legacy is that of Brexit. And that will stay. because I'm sad to say that the Labour Party now fully supports. Mr. Speaker, Scotland wants a different future, not just a different Prime Minister. So if the Prime Minister won't resign, will he call a general election and allow Scotland the choice of an independent future, free from the control of Westminster?
Prime Minister.
Mr. Speaker, I noticed that his remark that the Labour Party have given up on returning to the European Union was not greeted with rapture by the benches opposite, and that's because it's not true. They want to go back in just as he does. I think that is a terrible mistake. It would be anti-democratic, Mr. Speaker. And as for the referendum that he wants, well, we had one of them, as I've told him before, in 2014.
Come on.
Thank you, Mr. Speaker. Does the Prime Minister think there are any circumstances in which he should resign?
You've been listening to the Prime Minister asking questions there, answering questions from Ian Blackford, the leader of the Scottish National Party. This will continue. You can continue watching it. The PMQs continue on Bloomberg.com and on Bloomberg Twitter and on Bloomberg News US on Facebook, I understand. Tom, the Prime Minister under pressure, increasingly so.
The Prime Minister under pressure, and the illusion here at 12 noon London time, John, is you have to get to the evening. The experience of America is government's under threat. Usually things happen in the evening. John, what happens after this drama in the House?
We understand, Tom, there are even more resignations. And Kelly Lyons, those resignations continue this morning, even while this was taking place.
Yep, you just continue to see them. And he was asked the question just moments ago, how many more ministers have to resign before you yourself will resign? And he continues to push back on that, try to drive the conversation back to economic policy, fiscal stimulus, the work of the government that he wants to get back to. How much is he actually going to have success in doing so when this kind of turmoil is going on in the House of Commons, and he's going to face more later in the liaison committee?
Well, let's talk about the turmoil in the foreign exchange market. Sterling against the US dollar, 119, 119.10, and most people you speak to in foreign exchange right now, they find this entertaining. Some of it is pretty depressing, but ultimately, Tom, it is about what Kelly just talked about. It's about policy. It's very difficult to understand what the path of fiscal policy looks like with this mess playing out before us in the House of Commons.
Yeah, the immediate moment is tax cuts or tax increases. But I think, John, what's so important here is the island nation beleaguered and under threat. And, you know, we can argue all day if it's Brexit or that, but this is a group of conservatives and laborers facing extraordinary pressures, and you see that expressed within weak sterling. I mean, that's where we go at Bloomberg. But, John, I mean, as this drama continues and as Sir Lindsay tries to keep the government on the rails through questions to the Prime Minister, are we going to see a 118 handle on sterling?
We're not far off it now. We can head over to Lizzie Burden of Bloomberg News at 10 Downing Street. Lizzie, you've been listening into some of this. What do you make of it?
Well, there's always a worry that Keir Starmer, the opposition leader, will focus too much on policy rather than personality, but not this week. He's gone right in for the kill. He quoted at Boris Johnson the reported line that he once called this MP, that this whole scandal is about pincher by name, pincher by nature. And Boris Johnson dodged the question. He didn't want to answer that. And then Keir Starmer has referred to the Tory benches as a Z-list cast of nodding dogs. And Boris Johnson's repeated the same old lines back at him that the Conservative government has delivered on Ukraine, on the pandemic, on Brexit. He was even referring to the former opposition leader, Jeremy Corbyn, who he managed to beat into office. It sounded tired, frankly, John.
I've got two ways to go here, Lizzie. Let me first ask this, and of course I've been watching, like everyone in America, a very British scandal. It's about like 50, 60 years ago, and another scandal. And the outrage here over the immediacy, and we heard the gentleman from Labour talking about this. Is this about sex and scandals, or Lizzie, from where you sit, is it about much more?
It's about the character of Boris Johnson. The word that was used in both Sajid Javid and Rishi Sunak's resignation letters was integrity. They couldn't defend this constantly changing line about what Boris Johnson knew about Chris Pincher in public anymore. But it's the latest in a string of sex-related scandals to do with this government. It's called Pestminster here. But that adds on to the Partygate issue. It adds on to the cost of living crisis. So it's been the straw that's broken the camel's back, at least for Javid and Sunak.
John, amid the green leather of the House of Commons, and we've seen this before, I've actually witnessed it, the fire here, folks, is so radically different than what we see in America. John, how different is Labour from Corbyn to Starmer? How radical has that shift been?
Well, he's meant to be more of a centrist, Tom. He's meant to appeal to some Conservative voters in the way that Corbyn didn't, and ultimately we'll see if we go to an election. But Tom, it's unclear as to whether that will happen anytime soon. Indeed, whether we get that resignation from the Prime Minister and ultimately we get the leadership contest, and then ultimately further down the road you get a call for an election. But Tom, there's a lot still to play for here, quite clearly. And in the meantime, you're going to see more resignations and more pressure throughout today for this Prime Minister to resign.
Then who goes to him, as Barbara Conable did with Howard Dean and others with President Nixon, who goes to him and says, enough?
That's the difficult part of this. Lizzie, and I'll give you the final word. Who is that person?
Oh, I don't think it's going to be Joe Biden. But I just want to say about the difference between Starmer and Corbyn. Starmer seems to be very similar to Boris Johnson in the sense of he's saying there should be tax cuts. He's saying that they want to make Brexit work. He needs to create a gap between his policy and Boris Johnson's to capitalise on this moment.
Lizzie Burden, thank you. Outside number 10 Downing Street. That will continue. You can continue watching it on Bloomberg.com as well. We need to talk about this market. Futures down 0.1%. Some big things happening in foreign exchange. Euro dollar 101, 101.98. Can you get used to that? And can you get used to a sub 100 crude? A 99 handle in the last 24 hours. Crude bouncing back a bit, up 0.7% from New York City this morning. Good morning. This is Bloomberg. This market was really volatile yesterday, erasing those losses into the close on the S&P 500. Just a bit softer this morning, negative 1/3% on the Nasdaq on the S&P 500, down 0.2%. Looking ahead to earnings season, it kicks off big time next week with JP Morgan, July 14th. That one is in the diary, highlighted in bold with Tom Keene's yellow highlighter. That's the equity market. Here's the bond market story. 2s and 10s, and the difference between the 2s right now, negative a couple of basis points. We are at 280 on a 10-year, 282 on a 2-year. That's turned around then since the last time I looked. That curve, Tom, that's the story for us at the moment. Your 2-year is higher than your 10-year. And 24 hours ago, that wasn't the case. It was a positive story, now negative. We got some curve inversion, TK, in a way we haven't seen for a while.
I would emphasize here on a jobs week with no ADP report on this odd Wednesday that the markets, John, are really dynamic and they are linked. To see what we see in fixed income off of 107 DXY and sterling getting very close to printing a 118. It's very dynamic. It's an unusual Wednesday.
Looking ahead to payrolls, Tom, and of course those recession calls, that recession debate, that conversation, it's muddied by the fact that ultimately you've still got a labour market in and around 3.5% unemployment and churning out jobs growth of anywhere between 2 to 350 every single month. Whether that decelerates last month rather, this week, that's what people are looking for. But ultimately, Tom, is it a recession if you get 2 consecutive quarters of negative growth, but you've got a labour market that still looks like this one? That's the pushback we're getting at the moment.
And the point of issue here, folks, and we can take time on this now, I think it's so important, is on Jobs Day, John, if I get out the famous surveillance ECO chart, you've got non-farm payrolls of 265,000. That's a boom payrolls in a normal economy.
Your point taken. In a normal economy, there's been nothing normal about the last couple of years, that's for sure. That's your bond market picture, 2s and 10s, stateside. Let's talk about what's happening, developing over in Europe. Here's the good news. The spread between the Italian 10-year and the German 10-year is still trading inside 200 basis points, just about. That's the good news. Here's the bad news for the ECB. Euro dollar right now, 101. So you've got a 101 handle. And this is the problem that Kit Dukes over at Soc Gen has got with European policy at the moment. Any hikes that come from this ECB aren't supportive for this euro because they do not trust this bond market to stand on its own 2 feet. Now, Tom, if rate differentials are going to bite, you need some of this to come through the bond market. And the fact of the matter is the ECB, with this so-called anti-fragmentation tool, who knows how that's going to develop? So from an FX perspective, it's very difficult to understand the transmission mechanism, the transmission of policy from the ECB into the bond market and ultimately into foreign exchange.
And with fragmentation, which, come on, John, they're making it up as they go. I mean, it's like
of course they are.
It's like the way Kayleigh does stocks. She makes it up as she goes.
I'd like to think Kayleigh understands stocks a little bit more than this ECB understands that anti-fragmentation.
I'd like to think so too.
At the moment, because I'm not sure anyone quite understands it. And we got some pushback from the Bundesbank against it before it's even been developed earlier this week. There's a lot to discuss. So that's your story, 101 on the euro. We're getting closer and closer. Let's get you some single names. Let's say hello to Kayleigh. Hey, Kayleigh.
Hey, John. Well, a lot of the movement today has to do with just one story, and that is Amazon reaching a deal to buy up to a 15% stake in Grubhub, the food delivery business. Amazon reportedly is going to offer a year membership to Grubhub for those who are members of Prime. Amazon stock is down about 0.4%, so not a massive move, but a much bigger move for Grubhub competitors. The likes of DoorDash down about 8 percentage points, and Uber, which of course operates that Uber Eats business, is down by about 3.4%. And finally, this one is for Tom Keene, because we've talked a lot about fiat currencies today. We have not talked about cryptocurrencies, and BitDog, I had to take care to say that, Tom, is a little bit lower. So you're seeing some of those crypto-related names moving lower as well. Coinbase down about 3.3%. It's off 80% already just year to date. MicroStrategy's down 2.5%. Riot Blockchain down about 2 percentage points. But, Tom, that's all the crypto talk for today. I promise.
Well, I know you're going to deep planning on your show, Crypto. You'll be doing that on Thursday to get ready for the magnificent of next Tuesday as well. Right now on fixed income, Kelsey Barrow joins us, fixed income portfolio manager at JP Morgan Asset Management, putting real money to work. I believe it's price up, yield down. If on the first order condition of inflation coming in, how will bonds react, and where is the opportunity to go from 9% to, say, 7% inflation?
Yeah, so what we've been noticing in the market, and there has been incredible volatility in the inflation markets and in the bond markets recently, is that there has been a repricing of inflation, particularly when you look at the one-year inflation swap. So what the market expects, not for this year, but for next year. It's erased all of that inflation risk premium that got baked into the market as a result of the invasion of Ukraine, and all of the upside inflation that we've been talking about for essentially half a year. And so what we're trying to debate right now is this a true signal that inflation is going to decelerate, or is the Fed actually going to need to continue to press? Because the data they're looking at actually is not showing any signal yet that they need to stop hiking rates.
How do you use Bruce Kasman and Michael Feroli's work, particularly on the labor economy? Feroli puts at it on the weekly prospects. It's not on page 1. He's got it buried on page 7, where he's talking about the labor dynamics of the United States. How do you fold the labor question that John Ferro just mentioned into what yield and price are going to do?
Yeah, well, the labor market is still very strong, and it does paint a very confusing picture. You have GDP, which is weak. You have the Atlanta Fed, which is tracking at -2%. Now, a lot of that is not necessarily organically driven. There's a 200 basis point detraction in that forecast from inventories. But really, what we look at in terms of are we in a recession is, are we seeing the unemployment rate rise, and is nominal income falling? And neither of those things are happening. And to get the unemployment rate to rise this year, you're going to need to see a material deceleration in payrolls growth, which is not what we're expecting. In fact, just to get it back to 4% by the end of the year, you would need 15,000 job loss on average for the next 7 months to get there. So we're not in that environment yet. Jobless claims is what we're watching to see if that's ticking up. But for now, the unemployment rate is on the decline.
Never in my career have we hoped for job loss. Like, it's the oddest thing.
Let's be clear. I'm not sure Kelsey is hoping for that. I'm not hoping for that.
Yeah, I get that.
You're not. But ultimately, when you look at the Fed's trajectory of things, there is a belief that's what they're trying to engineer, to take some of the heat out of this labour market, and there will be consequences. Unfortunately, this is how this works, Kelsey. So we're trying to understand how much pain they're willing to tolerate, how far they're willing to push it, and what business the 2-year has at 282 if you think this Fed carries on hiking?
So the 2-year yield right now is actually inverted to what the market expects the Fed funds rate to be in just 3 months' time. So the market is really pushing the Fed right now and saying, how much longer is this rate hiking cycle going to last? And in our view, it's going to last for a bit longer. It's not yet time for the Fed to say that they've accomplished their mission, even with inflation expectations in the market declining. We do expect that the Fed will hike rates 75 basis points in July. We expect them to hike another 50. And by the way, right now, the market is not even pricing in a full rate hike for December. We think that the market is getting just a bit, going a bit overshot here in terms of the 2-year yield, and it should be going higher.
Well, I heard something similar from Priya Misra over at TD Securities earlier this morning, saying essentially inflation's still the problem and the problem is going to stick around. Therefore, expect the Fed to stay the course and be more aggressive. She said what all that leads to is a yield curve that is going to become even more deeply inverted. Is that the same camp you're in, Kelsey?
We've been expecting the yield curve to invert. It has been inverting. Different parts of the yield curve have been inverting at different times. Right now, we're seeing the belly lead in the inversion. So the 5 to 10-year point is what is leading. And that's because the market is testing the Fed. Again, they're testing the Fed and saying, can you really go through with this, particularly as the growth signals are really decelerating? And we noticed that the growth data that's been released more recently really is showing more of a deceleration than I think people thought. That third revision to Q1 GDP, I mean, no one looks at the third revision to Q1 GDP. It showed a really meaningful deceleration in services spending, and we need to be careful because we know that the consumer is this primary engine of growth, and they're not as strong footing as we originally anticipated.
I don't remember when we traded on expectations of inflation, and you, Mitch, either, and here we are. It's all confusing to me. I need to squeeze this in, Kelsey. It's just the final question. High yield spreads have been widening out for 5 straight sessions. We're at 583. You and Bob Michael work closely with each other. I just want to understand from you and the team, has that got interesting yet for you?
It's a bit of a no man's land right now because spreads are too narrow if we are expecting a full-blown recession, but they're probably too wide if we're going to escape recession. But in the longer term, we do think fundamentals in the corporate, in the high-yield market are actually much better than they have been going into previous recessions. So if you think about it and think about defaults peaked around 10% in the last, in the great financial crisis. We don't think they're going to peak at nearly as high as of a rate. And around 600 basis points on spread, that's already pricing in around a 6% default rate and a 35% recovery rate. So actually, a lot is priced in. The market is considering a modest amount of default risk, but unfortunately, the markets do tend to overshoot. And so it is possible that you continue to get that spread widening that goes beyond what we think is probably justified based on our default expectations in this next downturn.
Kelsey, thank you so much. Greatly
thank you, Kelsey.
This morning. Just really appreciate it. John, a tweet that I just think is so poignant, and I need you to translate this for me.
Let's see if I can.
From Birmingham, which is north, I guess. Gary Sambrook is a member of parliament. I believe he's on the side of the prime minister. And he tells the prime minister, quote, there's nothing left for him to do other than take responsibility and resign. I mean, these are brutal statements.
They are. Birmingham, Alabama. Birmingham. In the Midlands.
Well, they have a dark.
And they would take offence that you were saying they were up north because they are
the moment.
The Midlands, Tom. Futures negative 0.2
Midlands
on the S&P and the Nasdaq 100. We're down a third. I'll teach you the accent in the commercial break. How's that?
Please.
There we go. From New York.
It's like Pinky Blinders.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In the UK, Boris Johnson is fighting to stay in power after two top ministers jumped ship. Chancellor of the Exchequer Rishi Sunak and Health Secretary Sajid Javid are out. Their resignations came after Johnson apologised for the latest scandal, one involving allegations of sexual misconduct against a Conservative member of Parliament. Meanwhile, the new Chancellor of the Exchequer will be Nadeem Zahawi. He made his name as the Vaccines Minister during the pandemic. In Highland Park, Illinois, authorities have charged the suspect in the shooting at a 4th of July parade with 7 counts of first-degree murder. They say that dozens of more charges will be filed in the coming days. If he's convicted, the 21-year-old could be sentenced to life in prison without parole. Illinois is no longer has the death penalty. The US says that Iran is not serious about negotiating a return to the 2015 International Nuclear Accord. The State Department cites what it calls a lack of forward momentum and says Iran keeps raising extraneous demands. One of those is that the US remove the Islamic Revolutionary Guard Corps, a powerful military organization, from its list of terrorist groups. And the crypto crash has claimed another victim. Broker Voyager Digital has filed for a Chapter 11 bankruptcy protection. The firm cites market volatility and the collapse of a hedge fund it had lent money to. Last month, Voyager had secured a $485 million credit line from crypto mogul Sam Bankman-Fried's Alameda Research. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Even in a pretty deep recession, I just don't see oil prices going below $80, maybe even not even $90. Nobody's actually able to raise production very much. So that's on the one side. If Russia were to actually cut 5 million barrels, but it doesn't even have to do 5, it could do just 2 or 3, given how tight the market is, you can literally pick a number. I mean, 380, it could be 4 something, it could be 2 something.
That was Amrita Sen, Chief Order Analyst at Energy Aspects from New York City this morning. Good morning. Tons to talk about. Your equity market just a bit softer. We're down 0.4% on the S&P. Here's the FX market. Euro dollar with a 101 handle. I cannot get used to this, Tom. 101.88 on euro dollar, negative 0.75% on that currency pair. Briefly in the last 24 hours, a 99 handle on crude. Try to get used to that, 100 on WTI. And Ed Morse really got things going from Citi, Tom, with this quote right here. In a recession scenario, we would see oil prices falling to 65 by year end, potentially 45 by the end of 23, absent intervention by OPEC Plus and decline in short cycle oil investment. That was an interesting one, Tom, just ahead of that big move lower yesterday.
Joining us now for a 3-hour conversation, Dr. Morse joins us, Global Head of Commodity Research at Citigroup and truly expert on taking the global reach of our oil politics and crossing over to the microeconomics that Amrita Sen was just talking about. And I don't want to talk about the Marshallian cross and fancy micro mumbo jumbo of supply and demand. The arch guess is the measurement of global recession against the marginal emerging market demand as the EM and Pacific Rim come out of COVID. Those are two titanic forces. Who will win? Global recession, price down, or burgeoning EM demand, price up?
I think it's the macro environment that wins. And actually, we don't see the burgeoning demand coming out of China. There's a return, to be sure, but we have to remember that while China was cutting off about 1 million barrels a day of oil in real demand, they were importing a record amount of oil. They were stockpiling, and that had an impact on the global market. We had our inventory drawing, they had their inventory building. I don't see the international implications of Chinese recovery having much of an impact on the global setting.
Well, if that is the case, what are you watching as the dynamic that drives oil, as Amrita said, down to 90, or you suggest even lower? What is the single distinction right now that drives us to that shock?
I don't know whether there's a single distinction. I think it's called both supply and demand. So I think there's another view of supply that Amrita has not talked about, we see over 2 million barrels a day of Western Hemisphere growth this year, including 1.3 million out of the United States. The U.S. is already up 1 million barrels a day year on year. Canada looks for sure to be up 300,000 barrels a day. Mexico up 100 a day. Brazil up a couple of hundred a day. Argentina's up more than people thought. Venezuela's even up 300,000 a day year on year. So we think if you look closely at supply, it really is growing, and it's accelerating as we move from here to the end of December.
Your scenario work on a recession, Ed, got a ton of attention in the last couple of days. Can you help me understand what's behind that word recession to you? What is that word? What does it mean? What kind of numbers are you thinking about that get us down to, say, 45 by the end of 23, 65 by year end?
So it really is, on the supply-demand balance, a drag on the demand side. Almost everybody has reduced their expectations of demand for the year. We reduced ours by about 1,200,000 barrels a day. We're at the 2.4, 2.5 million barrel a day level. That's similar to where the EIA and the IEA are, and I expect that we'll be seeing further downward revisions in demand. Demand is simply not growing on an empirical basis to the degree that people had expected. And we've seen that U.S. demand is down. There was a Bloomberg quote yesterday that somebody at Bloomberg saw demand as low as it was in 2014. We think you've got to go back to 2012-13 to see demand at the levels that we're now seeing when it comes to transport fuels like diesel and gasoline. And if the movement is going to be anywhere, it's going to be downward. We're not going to see, there's no evidence that we're going to see this summer surge in driving and summer surge in demand. The price is too high, as it was in 2012-13. And that's a force in looking at global GDP from the perspective of one of the countries that's growing the fastest and has the most robust growth. The demand simply isn't there as people had thought.
But if it's not an outright recession, if it's just growth that slows back toward trend, which is the case of some people out there, Ed, how does that change the demand picture? What are we talking about then if it's not 65?
Well, we're talking about just on our base case, and we still have recession at lower than 50%. But we're thinking in our base case that oil is going to go down to 85. And that's looking at it purely on a supply-demand basis, looking at what the headwinds have been and the tailwinds. We've had a lot of tailwinds underlying where oil prices have been. We might have some more. We don't know what the summer weather is going to be. It could be a very volatile period of time. But we're looking at a supply-demand balance that's seeing inventory builds from here to the end of the year. And that's based on a purely empirical analysis of where we see kind of 100%, 95% probability of supply. We don't know what's going to happen to Iranian supply. We don't know what's going to happen to Russian supply. But so far, Russian exports into the market have been higher than people had anticipated and higher what the historical trend was a year ago.
Ed, this was a fascinating read. Thanks for giving us some of your time this morning, and a timely conversation too, after briefly looking at a 99 handle on WTI. That was Ed Morse of Citi, right now $100 and about 14 cents. Tom, on that market board, there are some new numbers that I'm struggling to get used to, and I know you are too.
It is. It's, and again, it's foreign exchange is the deepest market as well. We can go to oil, Brent crude from 124 down $20. Down to 104 right now over the last number of days. I'd also note gold south as well. John, I really want to note the unraveling of EM and what's not moved today. The elephant in the room, John, and I can't remember the first elephant in Japan. I think it was in the 19th century. But Japan hasn't moved. The yen hasn't moved. The yen is not weaker like everything else. 135.27.
Should I tell you something that is moving, Tom? 118.90 on sterling. There's a breakdown. Negative 0.5%, and 101.85 on euro dollar, very close to session lows.
Yeah.
The euro and pound sterling in a world of trouble in the last couple of days. And seemingly, Tom, and this is the problem right now, if you're a central bank, and I've had this problem for the last couple of months, and I've been asking that question of people who know better than I'm trying to work out whether rate hikes are currency positive or currency negative for this currency, for sterling.
Well, it's the ambiguity.
Or for the euro, and I don't know.
Yeah, the answer is the word that's used here, which is what you always, if you don't know the answer on an economics exam, always write down the word ambiguity. You'll get half a point for that. And the answer, John, as you mentioned with Christine Lagarde, is her optionality. I would suggest currency weakening lessens degrees of freedom for PhDs trying to game the future.
Tom, it's tough. What's going to pass through going to be from rate hikes into the bond market? if they want this anti-fragmentation tool? How much tightness are they willing to accept?
Ferro's hitting the button here, folks, because he knows where I am.
I want your view on this. Share
Fragmentation. Fragmentation is you're in Italy with a gorgeous view. Abramowicz is in Crete, and I'm in Manhattan trying to get below 52nd Street. That's true fragmentation.
What is wrong with Manhattan, Tom? It's a dream for a lot of people. Don't get used to it. From New York, this is Bloomberg.
Anything that's sensitive to the economy is just being taken out of the woodshed and destroyed right now.
I think there are still concerns ahead.
The market seems to want to center on the idea that growth is slowing.
We're not looking for an imminent recession. We are looking for a notable slowdown.
We're looking for a U.S. recession in Q4 of this year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio, on television, Bloomberg Surveillance. Kaylee Lyons in for Lisa Abramowicz this morning. John, I'm going to call this an absolutely historic day. It's not about the American or labor economy where we're ADP free. It's about foreign exchange and to an extent yield showing this shocking bet towards global slowdown.
And numbers we haven't seen for 2 decades, Tom.
Yes.
You've got to go back to 2002 to see euro dollar at 101. Sterling breaking down a 118 handle on cable. Tom, this is all starting to come together. A difficult time for Europe, and gas prices, energy prices very much at the epicenter of it.
I featured up 300% plus for utility costs in the United Kingdom. It's truly a hockey stick chart. But John, just to capture the moment, and maybe it's away from the morning dialogue, using JP Morgan math, EM foreign exchange has moved +3 down to -3.1 standard deviations since late May. I'm sorry, EMFX is in collapse.
Brutal. And Neil Dutta of Renaissance Macro puts it all together, Tom. He just called it what it is for so many people. Recession trade. Even crude rolling over. 199 right now.
Well,
99 on WTI. Curve inversion, Tom. 2s versus 10s. Negative a couple of basis points. It's starting to come together in a more pronounced way.
Let's summarize this in 20 seconds. I've got JP Morgan, Goldman Sachs, and others giving us the fear of 120, 150 oil, and Ed Morse just absolutely crushed that, John.
And that gives you an idea of the degree of uncertainty, Tom, going into year-end, that the range is that wide for people in this commodity market. Mohammed always does it well, doesn't he? Puts it together for us in a very simple way. Mohammed El-Arian said earlier, in the last 24 hours, we're trying to internalize 2 things. You're trying to price the slowdown and the Fed hiking into it. And Tom, the extent that this Fed is willing to go,
right,
I don't know.
Reading the literature, Kaylee Lyons with us this morning. Kaylee, where are we? 50 or 75 beeps? What's your guess?
It's as good as yours, Tom. But of course, we might get some insight. I know you like to write off the Fed minutes, but these could actually be crucial given how much changed for the Federal Reserve in just days before that June meeting when they made the decision to go 75. So what indicators are they going to be looking at as they decide 50 or 75 this month? Do we get some insight into that today? Because Powell right now, or at least in the past, has said, look, it's going to go either way.
John, quickly to the data. We've ignored stocks this morning. I'm sorry, that was a snappy recovery yesterday afternoon.
And it hasn't held in there. We're down 0.4% on the S&P. On the Nasdaq 100, we're down by 0.6% or so. And whilst equities recovered yesterday, high yield spreads again were wider. They were wider again for a 5th straight session. In the FX market, we've talked tons about that. 101.85 on euro dollar, -0.8%, and lots to talk about in the bond market too. Your 2-year, your yield 280, your 10-year 278, rounded up some 279. We've got a negative difference between 2s and 10s. And that is some curve inversion.
I can't tell you, folks, on radio to look at the screens on TV or to actually look at the Bloomberg terminal. This is truly new territory. We're going to stay away from the British story this morning. We'll brief you on that through the morning and into the United Kingdom afternoon with the Prime Minister of the United Kingdom under siege. Right now, on topic, Brian Nick joins us, Chief Investment Strategist at Nuveen as well. Brian, you wrote a few days ago about what is the zeitgeist this morning, which is suddenly disinflation. How suddenly is the disinflation?
I think it's come on suddenly if you've just been watching, say, the Fed funds futures market, where we still have the Fed price to go another 200 basis points or so before the end of the year. But if you've been looking at sort of the individual slices of the consumer price index reports every month, there's been a growing number of goods especially, but I think we'll eventually see this with some of the commodity prices as well, that have been an outright deflation, not just disinflation, but prices actually falling. And I think that basket of goods is going to grow. And if we have any of these things that are tied to commodity prices, so some of the headline numbers that we get ought to be softer as well, assuming we sustain this decline that we've seen. And that should, I think, create a different sort of psychology for the markets, which is what we're seeing now. But I think eventually for the Fed as well. The markets have not capitulated on the most important thing, I think, for the moment, which is that the Fed may need to slow down its rate hikes sooner than later.
So, Brian, is the NASDAQ getting interesting for you?
Absolutely, because I think there's still this path here, and I don't think it's too narrow to consider, where we get out of this too hot scenario that we've been in, where we've been in rapidly rising inflation, rapidly rising interest rates, a Fed that seems dedicated to just hiking rates inexorably to a point where the economy basically has to buckle. We can get from there to a better place without having to go straight through into the recessionary too cold scenario. So there is something in between there where I think growth stocks have a chance to do well. We've already seen longer duration, higher quality assets and fixed income start to outperform because there's a sense that Fed is not going to be hiking to 3.5%, 4%. But I think there's maybe more relief in that trade. And that's not a trade where we have to take a particularly large amount of risk for investors if we're making those decisions. That's more of a macro hedge, a recession hedge at this point, but at least something that we're being paid to take.
So, Brian, talk to me about how you would take that, how you'd express it. Would you do that through the index? What would you do?
So we put out a note a couple of weeks ago saying that municipal bonds, it's the sort of a moment for them that look attractive. We put out our mid-year outlook last week that made a note that duration should be something that investors have to start looking at again. So maybe not the index, but maybe if you're worried about the rest of your portfolio, if you're especially worried about the equity market and the chances for a recession that takes things even lower, one way to offset that is with higher quality, longer duration assets. And then within the equity market, I think a soft but not too soft growth scenario is probably the right spot for growth stocks. So yes, the NASDAQ, but also some of the names in the sort of this consumer area that have gotten beat up this year, as well as some of the healthcare stocks.
So, Brian, as we look ahead to earnings season, which really starts in earnest with JP Morgan next week, how confident are you feeling?
Yeah, this is something we're writing about this week, right? The one area, aside from the Fed funds futures market, where we haven't seen a recessionary capitulation is in the analyst expectations for earnings. So there's that, we just see these 2022, 2023 estimates continue to tick up, not just for the S&P 500, but for the Russell 2000 as well, which you'd think would be the more economically sensitive area of the market. So this is an area where there could be weakness. We need to see, obviously, the sort of the customary number and magnitude of earnings beats, but I think even more importantly, earnings guidance. So one thing that's been interesting is with all the focus on the labor market, real wage growth has been declining this year. So that's not been the thing that's been putting pressure on corporate profits. It's really been these other higher input costs. And if some of those start to ease, could we actually get some better news for the second half of the year if companies are not paying through the nose for their energy costs and some other areas of the commodity market? So that may be another promising, hopeful development that's not just related to the consumer, related to companies' bottom lines as a result of what we're seeing in the commodities market.
And how are you thinking about the inventory issue, which could, in a way, go back to Tom's point on disinflation at the beginning of this conversation?
That was really the first shoe to drop a couple of months ago, right? Where we had the week where retail just melted down because of the higher inventory numbers. That certainly could be disinflationary. I don't know about you guys, but I'm getting a lot more emails every day from large retailers trying to get me to come in and buy something or buy something online. It was about 2 years where I wasn't getting any of those emails. So I think that's part of the story as well. It's not going to be one thing that sort of brings us out of the high inflation, nervous environment that we've been in for the first half of this year. I think it's going to be a multitude of things. And there's going to be, I think, some pain at retailers, probably some curtailing of employees there, but there's other areas of the economy where there's acute labor shortages. So this is really still, I think, the post-COVID recovery we're seeing in the labor market, and it's gone slower than I expected, but I think it still is very much happening this summer.
Brian Nick of Nuveen. Brian, thank you. Kelly, I unsubscribed to all the emails from the retailers because I would get so many, and I'm done with that.
Well, the discounts are there, John, if you want to take advantage. I got a great discount on my patio furniture from Target.
You listen to that, Tom?
38% off.
You've got a patio in Manhattan?
Brooklyn. I got priced out of Manhattan.
But you've got the patio in addition?
Yes,
okay.
yes.
Isn't that a luxurious item, Tom, for Manhattan? Some patio furniture.
It's extraordinary. I mean, Kaylee's patio is larger than my last 3 houses.
But you've got to move to Brooklyn for that, Tom.
Yeah.
I think
that's out of Tom's radius.
She's got the.
Well, it doesn't go south of 50 seconds, so there you go. Getting some comments from the press secretary in the UK, Boris Johnson's press secretary.
Comments, huh?
Here we go. The Prime Minister will contest any Tory confidence vote. There are no plans for a snap general election. The Prime Minister believes he would win any Tory confidence vote. So they're the latest headlines. Of course, Tom, he's meant to. And as we read out those headlines, I'm sure there's another resignation somewhere that we need to talk about.
I mean, the Conservatives are all dripping out here saying they're not going to support him. And then, John, what, like at 8 p.m. on a given night, do they just count up the bodies and say, that's it, you're done? I mean, it's odd.
Ultimately, if there was another confidence vote now, Tom, given the drip feed of resignations we've got, you'd think that vote would be a little bit different.
Well, do we get to that? I mean, Peter Walker at The Guardian writes up these different scenarios, John. And is it one of them that he just says enough?
Potentially, Tom.
Okay.
I'm not sitting on the fence here. It's just that's where we are. We're just tallying up these resignations as they come through. The Prime Minister, somewhat defiant, trying to hold on. We'll see if we can hold on. In the meantime, you've just got to break down in the currency market. And a lot of that is not about the politics. It's just about the economic situation the UK finds itself in. And it's not alone. I'm looking at the euro at 101. And the last couple of weeks, Tom, a Swiss National Bank that's just willing to take that currency strength on the chin, it seems, and hike interest rates.
Money flows to Switzerland. It was funny how President Biden, it was very lovely, I thought, how he misspoke and didn't say Sweden. He said Switzerland would join NATO, and he said, wait, I'm getting out in front of myself. Switzerland's different, John, isn't it? The money flows in to Zurich, and that means strong Swiss franc. 0.9899 is stunning on franc strength against the euro.
Are you asking me if Zurich is different to Stockholm?
I just think we need to visit Zurich here.
And Stockholm.
And Stockholm. And,
okay.
Road trip.
Road trip. Exactly.
Teddy, you know the rules here, don't you? This is just Tom making pitches to the team to go somewhere. What time's your flight to DC?
I don't know. Teterborough's backed up.
Okay. I'll race you. Futures down 0.4% on the S&P. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. British Prime Minister Boris Johnson could face a leadership challenge as soon as next week. Rank and file Conservative members of Parliament are meeting today to discuss whether to hold a confidence vote. Two senior members of his cabinet, Chancellor of the Exchequer Rishi Sunak and Health Secretary Sajid Javid, quit Tuesday in the wake of the latest scandal. There's been a steady flow of Conservative MPs resigning from junior positions today. The suspect in the shooting at an Independence Day parade outside Chicago has been charged with 7 counts of murder. Dozens more charges are expected. Local officials say the 21-year-old man had probably planned the attack for weeks. He used a rifle that was said to have been purchased legally. The European Parliament is gearing up for a controversial vote on whether gas and nuclear energy can be considered green. Opponents say a yes vote would tarnish the EU's ambition to set the gold standard for the green finance. The discussion has heated up since the invasion of Ukraine, since the region wants to get rid of fossil fuels from Moscow. The Secretary-General of OPEC has died. Mohammed Barkindo was in the final weeks of his 6-year tenure as the head of the oil cartel when he died in his native Nigeria. Barkindo oversaw one of the most turbulent periods in OPEC's history, beginning with the creation of the OPEC Plus coalition in 2016. Mohammed Barkindo was 63. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I think the danger is, if you like, is that policymakers, leave it too late to panic, and we actually, by being backward-looking, end up, raising rates too far, and ultimately push the economy into recession. And I think if the Fed goes meaningfully above 4% in the Fed funds rate.
David Riley, the chief investment strategist at Blue Bay Asset Management, on the potential to go to 4 and the consequences of going there. Right now, we've got to talk about some consequences in foreign exchange off the back of some big moves in European gas over the last few months. Year to date, euro dollar 101.77. The single currency breaking down once again, session lows are -0.9%. And Tom, a bid into this bond market, German yields down 10 basis points at the front end on a 2-year, on a 10-year down 5. And just the doubts building and building about the ECB's ability to deliver any kind of rate hiking cycle through the next 12 months or so. HSBC out this morning saying if we get a rate hiking cycle, Tom, it's over year end.
Well, yeah, I mean, I'm going to go with the Euro story, and I agree, John. That's where the drama is this morning, and of course across the pond to the, across the canal, I should say, to the United Kingdom as well. But I would say, John, this is much more global measurement of recession with, as I said earlier, the one outlier is Japanese yen. Given all I see, yen ought to be out at a 137, and it's not. It's stronger yen.
Yeah, and looking at crude, Tom, just in and around 100. Want to stay on top of that. $100 and about 44 cents off the back of monster move lower in yesterday's session.
Futures -14, Dow futures -80, the VIX 27.97 after a better than good afternoon. Henrietta Trey's right now gives perspective on radio and television across America, Director of Economic Policy Research at Veta Partners, with some real tangible experience within the white marble of the Capitol. Henrietta, we have been transfixed today by the questions of the Prime Minister, the drama of what's going on for Prime Minister Johnson in the United Kingdom. Would your world be better off if we had president's questions, if we had much more fiery, visible debate within Congress than the sleep fest it's become?
I would love that. I think that would be fantastic. I think that politicians tend to speak more truthfully when they're put on the spot, and we're always looking for those little mistakes that might hold nuggets of truth, which we've seen from President Biden time and again. I would love to see that, and less agenda journalism, as y'all were just mentioning. It's a great idea.
How unified are the Democrats right now in the House, in the Senate?
That's a great question. On the House side, my anxiety has been pretty high because we saw the Progressive Caucus really derail a lot of the BBB agenda in the back half of last year as they were negotiating that infrastructure bill, and ultimately failed to sway the Senate, which is always the case. And the faster House members understand that senators always get their way, the better. On the Senate side, you have a very shaky, faux majority of just 50 senators. And I think there are very few things that they can agree on. One of them is, hey, healthcare really rallies voters during an election cycle. So let's do a reconciliation bill with a healthcare component. Climate change posed very well with independent voters who are going to be so critical to turning out the vote in favor of Democrats or Republicans in this next midterm cycle and the general election that's just a couple years away. And so if you can cobble together a bill that's a healthcare package and climate, keep all the toxic stuff out, you can get a real bill passed through the House and Senate by September 30th on the reconciliation front, which is, I think, something that will happen.
Okay, so Henrietta, if we kind of look at these two scenarios together, when we were watching the Boris Johnson in Parliament trying to get around the questions around his integrity, saying, but look at what we're doing. We are putting £1,200 into bank accounts of UK citizens today. We are cutting taxes. We are doing all of these things on policy. President Biden also has been trying to take action, or at least signal action on policy when it comes to fighting inflation. Just look at the news yesterday of potential tariffs, talks on $10 billion worth of goods. How many more signals does the president have left to send? What other cards are there to play that are in his control?
They're throwing everything at the wall here. I would say a couple things on that. The $10 billion sounds big on paper. That represents roughly 2% of the overall tariffs that have been imposed against China. And the way that it's been expressed to us and via the news reporters y'all have, the great Jenny Leonard at Bloomberg, is to say that the consumer-facing items, which are your bicycles, your back-to-school gear, backpacks, baseball gloves, those are all on list 4A. So when investors think about those tariffs and what the administration is signaling, be mindful that those tariffs are only on at a 7.5% tax rate anyway. So you're talking about a very small portion at the lowest possible tax bracket today.
So Henrietta, is essentially what you're saying, we're not going to feel that? Voters aren't going to feel that?
I sincerely doubt it. It sounds very big, $10 billion, but you're looking at $360 billion worth of goods that have been tariffed. And the only rate to reduce is 7.5%, not 25% that exists for the other items that are tariffed.
Henrietta Trey's there, Veta Partners. Henrietta, thank you. TK, I would love President's questions. That would be fantastic.
I
just brilliant.
I'm sorry, it's fine. I remember the first time I went with the great Gonzalo Vina, I sat behind the goal up high. I'm kidding, folks. I sat behind the Speaker of the House way up high, John. They served popcorn. It was great. And actually, it was really cool. What was great for me, John, and not realizing this, that the building was destroyed in World War II by bombing, and it looks like old and sort of ancient, but it's not. It's 1950. And the heat, I was shocked. I believe it was Gordon Brown and Mr. Cameron is who I saw.
Oh, interesting.
And I was shocked at the intensity.
By how hard they go at each other,
I was completely unprepared.
The politicians on both sides of the aisle in America are very thin-skinned. Yeah. And in the UK, Tom, regardless of who's in power, you can have a very firm, strong, you might call rude interview, and ultimately they'll come back the following week. And that doesn't seem to translate in America at all. If you ask someone a firm question, it's because somehow you represent the other party. And I wonder, Tom, if that's just a consequence of the way the media is set up in this country, that you have sort of fan club TV for each party on cable news.
I don't know. You know, all I know is I went to lunch with the wonderful Lord Desai, Meghdad Desai of the London School of Economics, profoundly important to modern America, United Kingdom capitalism, and he taught me how to measure fingers of scotch. It was great, John.
Very cool.
It was a learning experience.
Did you have the drinks before you went?
No, we had the drinks afterwards. But
okay, so after lunch.
It was like a Germanic lunch. It like stretched into, the sun was going down. You know, you're so high up near the North Pole. The sun was going down as we were getting out of lunch.
I think that we have longer days in the summer than we do here in New York.
This was, I think, in the gloom of winter.
Okay, all right, good to know. Futures are down by a third of 1% on the S&P and the Nasdaq 100 down a third of 1% also. Tons to talk about in this bond market. Where do you want to begin? Curve inversion, 276 now on a 10-year in the Treasury market. We're down 4 basis points. Big bid into the curve in Germany as well. So a bit of risk aversion building there again. And just the euro. The euro can't get a break. The low of the session is 101.75, and right now, Tom, 101.81, down 8 tenths of 1%.
For people not in global Wall Street, these are extraordinary levels we're at.
They're just numbers we haven't seen since 2002. It's been
20 years ago.
That long. The Eurozone debt crisis did just not produce the weakness that people were looking for in the single currency. That weakness is here now. From New York, this is Bloomberg. Live from New York City for our audience worldwide with Tom Keene and Kelly Lyons. I'm Jonathan Ferro. Bramo back with us next week. Where do you want to start in this equity market right now? Down a third of 1% on the S&P, on the Nasdaq down 4 tenths of 1%. TK, we've got to hit the bond market. Kelly mentioning in the commercial break, we're back below 2% on a British 10-year. The UK 10-year at 199. Breaking down on Treasuries, yields lower 4. Breaking down on German bunds too, yields lower there.
It's not letting up either in the currency market. We're still seeing a dollar advance off DXY. John, I want to go back to one comment you had. I can't remember who we were talking to. I don't think it was Prime Minister Johnson. And you mentioned, given the gloom that's out there, is that when the NASDAQ finally goes? And I think that was an important question.
That was the Brian Nick, sure. Yeah. When does it start to get interesting?
Yeah.
And when we asked Kelsey Barrow, too, over at JP Morgan, when do spreads, high-yield credits start to get interesting? When high yield, those yields on those bonds, Tom, what are we pushing now, 9%?
I don't know.
In credit, sure. It's out there.
And we're starving for data. John, we're like devoid today. No ADP data.
You get jolts, though, Tom. You get jolts, ISM services. There's some economic data and some Fed minutes out there. Should we ask Mike McKee about it?
Let's ask him about it.
He's with us now, our Bloomberg economics and policy correspondent down in D.C. and Washington ahead of the Fed minutes. Mike, where do you want to begin? The data ahead of the Fed minutes?
Well, the data ahead of the Fed minutes is going to be interesting, but not decisive. The ISM services index out at 10 will give us some sort of view of what employment is like in the services industry and the kind of direction of business in the industry. And so that'll be useful for people. Jolts probably just reconfirms that we have a lot of job openings because, of course, it's 2 months delayed. The big focus seems to be on the minutes, and that one I don't get because it's 3 weeks old, and a lot has changed in 3 weeks.
Thank you, Michael McKee. I love that. It's great. What we're going to get is some, several, a few. Is that germane now, or is it just about the chair? Powell, Jerome said.
Well, you go back to the January meeting and the minutes released in February when they said that they might have to speed up the pace of rate increases, and that freaked everybody out. And so now there's this focus on the minutes. But you take a look at the dot plot from the last meeting, and at that point, the market was seeing the Fed underneath where it should be by the end of the year. That's the kind of blue line. If you were looking at the dot plot on radio, you'd be seeing a line above where the Fed's median dot is. And now the white line is way below. That's Fed Fund Futures now. Yeah. That's way below where the Fed is. So the market's already moved on. And what happened when that blue line was put in place is no longer relevant.
That chart really works, Mike. It's like when the Yankees lose 2 in a row, we do a chart for radio and it works out great. Mike McKee, thank you so much. And really, folks, it shows the shift, the adjustment that we've seen just in the last couple days. He was at Barclays and he was absolutely brilliant. So brilliant, he went off to 0.72 where he has to watch the New York Mets. Dean Mackey joins us now, chief economist at 0.72 on a very changed global economy, a very changed United States economy as well. Dean, what's great about your Stanford economics is you go to the micro data and you go traditional old school and say, we must watch jobless claims. We'll see them tomorrow. Define surging jobless claims.
Surging jobless claims would be a rise of 50, 100K in a fairly short amount of time. And so far we've gone up maybe 20K from the very bottom. So right now, I think we can confidently say we're not currently in a recession. And because that always happens in recession. Jobless claims surge, the unemployment rate surges, payroll growth declines. None of that's happening right now. It's not saying it won't happen at some point late this year, for example, but we can say what's happening right now with measures like that.
The troops went out to the Hoover Institution of Stanford, and they talked about regime change a la Bullard, and this new word that's out there, front loading. Dean Mackey, if we front load our rate rises, what will that do to the real economy that wraps around labor?
I think it depends how much front loading they actually do. I think what we can say is if the Fed keeps going 75 basis points a clip for an indefinite period, we will have a recession soon. So really, it depends what the Fed means by that. I think what we've been hearing and what we're seeing in the dot plot is something like another 75 in July, maybe a 50 in September, and then 25 per meeting after that. If we do that, then I think the economy can stay in a slowdown mode and not slip into recession. But if the Fed feels they can't slow down from that 75 per meeting pace, that's really going to clobber the economy.
So, Dean, Tom doesn't care about the Fed minutes. Michael McKee didn't actually seem to care that much about the Fed minutes. Do you?
Well, we certainly have to pay attention. I don't think we'll probably have a decisively different view of the Fed based on the minutes, but sometimes there are some things in there that are interesting and maybe color the outlook a little bit, but I wouldn't have great expectations for them.
Okay, so as we talk about kind of front loading of the hikes of potentially 75, then 75 for who knows how long, at what point are we no longer going to be talking about hiking but cutting instead?
I think that, again, that depends partly on how rapidly the Fed raises rates, because if the Fed does induce a very sharp slowdown or recession, then cutting next year is quite possible. But if the Fed is able to slow down and get on a more gradual hiking path, I don't think they'll necessarily be cutting soon. So it really depends on how much front loading and how quickly the Fed does.
Dean, let us talk about the arch glide path, which is the inflation migration downwards. If there's a kink in the curve, where's the kink? Where does this become hard? John and I are going to talk to Adam Posen in a few days, and he says the new 2% is 3%. Do you have a 0.6% or 5% where the dialogue changes because then it's way harder to push inflation lower?
I don't think it works quite like that. So I tend to think of it more as the different parts of inflation. So we know goods inflation already is coming down. And if you talk to industrial analysts or people that are following those companies, they're telling us prices are falling in those industries already. And we're seeing it in the CPI and the PCE. Core goods inflation is already falling. The services are really what's going to determine how far we can fall. And I think that it's realistic that we fall down into the 3% range. Whether we can get down below that on core PCE is a question mark. And it really depends on how rapidly wages are rising at that point.
Let's go to the rate of change. And I don't mean Mets middle relief. The Mets are killing it this year, except for another team up in Bronx. But Dean Mackey, very simply here, where's inflation in 60 days, 90 days? How rapidly do we come off the panic of 8-9% and come down? How fast is that going to happen?
Well, I tend to focus more on the PCE because that's what the Fed follows, and we're at 6.5 there. I think by year end we can be down into the 3 or 4% range on PCE price index.
There's your break of 3% on a 30-year. Dean Mackey of 0.72. Thank you, sir. 2.99 on a 30-year yield in America, down 5 basis points on a session.
This would happen.
Or TK, you were looking for it about an hour ago. Here it is.
I was looking for it, but not like within 2 cups of Tang.
2 cups of Tang later, here we are.
This is how we measure time.
That's how we measure time on this program, Kaylee.
Thank you.
Thankful, Kaylee Lines, that she's just a guest on this show and doesn't have to tolerate this permanently. Tom, it's not just the bond market. 107 on the dollar index. I said earlier this morning, these are just numbers you've got to try and get used to again. I have no idea for how long. 107 on the dollar index, just numbers we haven't seen since 2002 for the dollar index, for the bond market, I believe, since May.
But dovetail the velocities here, John, with what Dr. Mackey just said. His decline in inflation is extraordinary. I don't think that's in the market.
When does the Fed start to respond to that? Tom, would be my question. When does the Federal Reserve start to see evidence of what you're discussing? And then when do they press pause? The answer to that question at the moment for a lot of people on Wall Street is not yet, and perhaps not anytime soon. Everyone was forecasting a rough summer, Tom, about a month ago, and it's getting rougher in parts of this market, maybe beyond equities in a way that we didn't anticipate in foreign exchange. Yeah. For the Federal Reserve, though, Tom, I just wonder, that dollar strength has got to be good news, hasn't it?
10-year real yield comes in as well. Yeah, I mean, they're correlated together. I get that. And to your important point in the NASDAQ, we'll have to watch this as well. But again, I'm going to calculus here, John. The first derivative, the second derivatives. Dean Mackey was stunning there on a first derivative that's going to move far faster than most people expect.
Well, talk to me about how you think that stacks up against what the Fed expects, because the Fed has core PCE at 4.3 year end, it's not, 2.7 next year, 2.3 the year after.
They're supposed to be behind. To Michael McKee's great dot chart, which didn't work on radio. I mean, the fact is they're always behind. I mean, let me get it out here. I'm looking at more resignations in the United Kingdom. I don't even.
You got another one?
Yeah, I think Gareth Bale resigned. Right?
Gareth Bale resigned.
Yeah, July 27th.
Aren't you?
Where are we the November 2nd meeting, John?
I have no idea.
No clue.
Where's the ECB? Never mind the Fed. Where's the ECB once you get out to the back end of this year? How many hikes have they managed to deliver, Tom? Because we forget, and allow us to remind you, they're still at negative 50 basis points, Tom, over at the ECB. They've talked about raising interest rates. They have not done it yet.
I don't know. I'm speechless here over what we're seeing on the Bloomberg. And again, I folded into the rates of change that Dr. Mackey talked about. What's it mean for corporations? How do you, John, I know you got John Golub coming up on your other property, but how do corporations adapt to this turmoil?
John is constructive on earnings, Tom. He's going to join us in the next hour from Credit Suisse.
Calm down.
He's come down to 4,300 on the S&P. Okay. Still sees upside in the equity market. Believe that's a very old photo of Jonathan Golub that was shown right there. I'm not sure Jonathan would approve of that particular photo, Tom, but that's a different story.
That's a bull market.
That's a different story.
It's a bull market.
But he's constructive on the earnings, TK. That's at the epicenter of his call.
Yeah.
We'll talk about that in about an hour from now. Looking forward to it.
I just saw 2 parliamentary secretaries resign. Do they matter? I think the bartender at the club that Desai took me to resigned.
That list is getting longer.
It is.
Let's put it that way. I'll see you at the airport, Tom. Futures down 0.2 on the S&P. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. British Prime Minister Boris Johnson is vowing to keep going in the face of calls for him to quit. Plotters in his own Conservative Party will discuss holding a confidence vote. Meanwhile, more junior ministers quit government positions today. That came after the Chancellor of the Exchequer and the Health Minister resigned Tuesday. In Highland Park, Illinois, authorities have charged the suspect in the shooting at a 4th of July parade with 7 counts of first-degree murder. They say that dozens of more charges will be filed in the coming days. If he's convicted, the 21-year-old could be sentenced to life in prison without parole. Illinois no longer has the death penalty. The US says that Iran is not serious about negotiating a return to the 2015 International Nuclear Accord. The State Department cites what it calls a lack of forward momentum and says Iran keeps raising extraneous demands. One of those is that the US remove the Islamic Revolutionary Guard Corps, a powerful military organization, from its list of terrorist groups. And the crypto crash has claimed another victim. Broker Voyager Digital has filed for Chapter 11 bankruptcy protection. The firm cites market volatility and the collapse of a hedge fund it had lent money to. Last month, Voyager had secured a $485 million credit line from crypto mogul Sam Bankman-Friedman Al-Nadia Research. Walmart reportedly has told some suppliers that new fuel and pickup fees are coming. According to the Wall Street Journal, the giant retailer will charge companies that use Walmart to transport goods to its stores and warehouses. Some of Walmart's competitors, such as Amazon, have already imposed similar fees this year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The priority now is whip inflation now, is to bring inflation down. As long as prices stay up, I think you're going to see an aggressive Fed, and you're probably going to see higher interest rates and an inverted curve.
On the radio, James Bianco from Chicago with a whip inflation now, big red button on his lapel, turn it over. No immediate miracles was the theme from the Gerald Ford Years on Inflation. It's been part of our theme today. And you join us here mid-morning into Jobs Day on Friday with the markets absolutely historic. There's no other way to put it, with dollar strength extraordinary. On that and on the new bond volatility that we're seeing, again, extraordinary. Kriti Gupta joins us. Kriti?
Yeah, Tom, this comes fresh on the heels of that yield curve inversion, which we saw in late afternoon yesterday. Now, the question here is, what are we actually seeing in the bond market? Is it on pace, or is it on par, I should say, with what you're seeing in the FX market, the stock market, even the crypto market, dare I say? So here for my chart, we're looking at the volatility via the MOVE index. Essentially, it measures the 1-month implied volatility in Treasury options. That's a lot of fancy talk for basically just saying when you start to see moves like 17, 20 basis points intraday, this is the chart that moves higher and higher. And actually, we're looking at bond volatility that goes and that mirrors what you saw in March of 2020, the peak of that crash. The question here is this just a bond market that's repricing, that's actually looking into recession, or is this actually some sort of fight or flight kind of dynamic? How much of this is a result of the participation in the bond market right now?
Kriti Gupta, thanks so much. One of our themes here, folks, and to round out this hour, and I think an important conversation, is the what if of inflation coming down. Let's pick 8-9% as the range we're in now, coming down to 6%. And then what if, and we heard from others, including Dean Mackey of 0.72, the idea of inflation, disinflation happening more than rapidly. Ira Jersey joins us, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. What do bonds, notes, and bills do, Ira, if we get the Mackey call on a great disinflation?
Yeah, so I agree with the idea that James mentioned, that the whole curve is probably going to invert, in part because the Federal Reserve is not going to be that quick to start to ease interest rates, particularly over the next year. The market is pricing for a pretty dramatic decrease in the rate of inflation, but you're still pricing right now for around 4.4% year over year inflation this time next year. So So that's less than half of what we've seen the last couple of prints, but still well above the Fed's comfort zone. So I think that the important part of that, what the market's pricing right now, is going to keep the Fed at whatever rate they end up going to, 3.5%, and then stay there at least for some period of time until they're confident that they're going to be able to get closer to that 2% target for headline inflation that they're looking for.
But talking of that terminal rate, the market pricing of that has come down substantially just in the last couple of weeks, Ira. How appropriate is that for you?
Yeah, I think, we keep on repricing, and I think this is the key, and one of the big reasons why you've seen this rally in the long end of the Treasury curve is people are pricing for a lower terminal rate plus a potential recession. So therefore, interest rate cuts come the end of 2023 into 2024. The analyst strategist community is all over the place. I'm very sympathetic to the idea that the Fed may need to go up toward 4% to at least get to a real neutral Fed funds rate. So a rate where it looks like inflation and the Fed funds rate are basically the same for some period of time. But at the same time, the market is very skeptical of that at the moment and thinking that we might actually be in a technical recession right now. We've certainly seen a significant growth slowdown in real economic activity. So the market doesn't think that the Fed's going to be able to get to that 3.5%, much less upwards of 4%.
Yeah, well, right now we're trading a lot closer to 2% on the 10-year than we are to 4%, Ira. Which one do you think we're more likely to see first?
Well, I think on the 10-year, so we have fair value on the 10-year right around 3% plus or minus, and there's always some variability in that, like our model has an error range. 2.7% is a very important technical level right now. We've tested that twice. And if we break through that, then 2.5% certainly is the next stopping point. Will we see 2% near term? I don't think so, but I do think that we may have seen the highs for this cycle in the 10-year. And really what you're going to see in the way that you're going to invert the yield curve is by 2-year yields, kind of staying where they are, going up a little bit, maybe getting to 3.25, and really the 10-year staying more or less where it is, maybe get to 3%.
On the vanilla curve there, 2-10 spread, negative 2.5 basis points right now. Ira Jersey, thank you so much. Kayla, we got 5 ways to go here with DXY 107, Euro 101.79, Sterling under 119, 118.94. How about a single sentence, Kaylee, from Selene Saxby, mathematics at Cambridge, a conservative from Devon. I hope I'm pronouncing that right. I remain loyal, as always, to the Conservative Party and my constituents, and whilst I have endeavored to retain loyalty to your government, this is no longer compatible with my values I hold dear, as she resigns from the government of the Prime Minister. This is happening in real time, Kaylee.
Yeah, it seems like just every couple minutes we get another resignation, Tom, with similar sentiment being echoed. The idea that they no longer have confidence in the leadership of Boris Johnson. And yet Boris Johnson is firm in his commitment to hold on to the premiership. He wants to stay in power. The question is, how long is he able to do so as we see the string of resignations and as we see that those backbenchers, the 1922 committee, meeting today at, I believe, noon Eastern time, 5 p.m. UK time, to try and discuss changing those rules for another no confidence vote, which we heard from the press secretary of Boris Johnson. He will fight that if it happens.
Away from the opinion of a very ample British press, I would urge you to look at Bloomberg UK out on Twitter, and of course the website over there, Stephanie Flanders and others running that effort out of London. I think they'll be particularly active here in the next 24 hours, and particularly with opinion to explain to ugly Americans like me what's happening distant from when the colonies defeated the mother country. That was a few days ago, Kaylee. It had to do, Kaylee, with Cornwallis in Virginia.
Yeah, the Battle of Yorktown.
Kaylee Lyons, 3rd grade. Oh no, another trip to Yorktown. Futures
we went to Jamestown,
-1.
too.
Dow futures at -10.
And Williamsburg.
Ian Bremmer and the 12 noon hour. Stay with us. This is Bloomberg.